Good morning. Friday, 26 September 2025. It's a big day in my world. Welcome to Risk Neutral Trading. This is my virtual trading journal. The idea here, first, it's not for financial or trade advice, the usual thing, right? There's a disclaimer in the description here. It is my virtual trading journal, and I share it openly and freely via here at YouTube. But when I say you or whatever, I'm talking to myself. You need to remember that the idea here is I capture what's on my screens and with the video, and then my voiceover provides some insight as to what I was thinking at the time. And that's how it works. If it's helpful to someone, that's great. I am not monetized in any way here with the stream. So your likes and subs and throw something in the chat's really great. It is my virtual trading journal, and my mission is to record accurately, transparently my trading and my journey with that, and the development of a consistently significant, profitable trading business. All right, let's. The reason I stream this to YouTube, A, is for the transparency and the accountability, and probably the biggest reason is I can review the stream on any device. I don't need to be standing here. I have stand-up desks only. Well, I'm standing up around 12 to 14 hours every day. So it's nice to be able to review the stream without standing here continually for more hours. The stream is terribly long, of course. It's about 7 hours every day. And the reason for that is, again, the transparency and accountability. I start now with the pre-market every trading day at 8 o'clock, and that's where we're going to go next. So the next order of business, hey Panda, the next order of business is the reports. Now we've just had the PCE out. You can see the result of that. Here's our, this blue line is, I put on the chart here on Bookmap every morning at every session start, session opening. Here is yesterday's ETH session open at 1700 last night, yesterday afternoon. And there's the session all the way up until 7:30 this morning when we had the PCE numbers. The next big one that's going to come out this morning is going to be Michigan. Let's take a look at the numbers here. This is my news, one of my two news feeds. This is investing.com, which I like because it's got a nice, clean presentation, good for snapping and putting into another, Discord site or wherever. Here you see the PCE numbers. That's a hell of a big move for basically not much improvement. I'm kind of surprised. But here we have Michigan at 9 o'clock. These can be serious market movers. For some reason, investing.com only puts 2 stars on them, but definitely watch them. This is a free service, and also we have, Panda, I'm going to help you in a minute. And here's our earnings, nothing coming up. So let me just see what she's up to, and I'll be right with you. What's that? What do you want? All right, this is Financial Juice. The other news source that I use, and I'll explain why I have two, it is also free, but you can certainly pay for either one of them. The way Financial Juice works is the calendar, the docket over here is pretty much the same as IRT. I just find I find investing.com easier to read and better for screen snaps and whatever else. You notice that the University of Michigan over here is critical, as I said, and it's only a 2-star investing.com for whatever reason. But on the right side here is more of a squawk box presentation throughout the day. So that's why I have two. And they're both free, and they are financialjuice.com and investing.com. Simple. Huh? All right. Let's get on with it now to the important part of the day, which is the pre-market. This is IRT. Boy, I need to have some more coffee or something. Basically, this is the ES Mini, NQ Mini. This is the ES Mini, my higher time frame or micro composite chart. And this is the market profile chart. It currently is in the full session mode for the ES Mini. These are, this is yesterday's RTH session, and here's today's, or so far in this ETH, or electronic extended trading hours, however you want to call it. And you see what happened here with the number, and now they're coming back to ground zero. If we continue as we are, we will be, our open type will be higher out of range. We'll talk about that in a minute. Let's look at the higher time frame, which is pretty important. And that's the way you should start, in my opinion. Higher time frame down. This is the micro composite chart, my micro composite chart. You can do it any way you want, whatever makes sense to you. That's what's important about trading. Remember that this stream, what I say, should never be interpreted as my way or the highway, right? This is what I'm doing, and if it helps or resonates with you, great. This is the day session only, or RTH. These are daily candlesticks. Wherever they overlap, one to the other, I continue drawing a volume profile around them. By doing that, it generates a high and low volume node, which are represented on this chart by the red and green lines. And those values are pushed automatically to bookmap continuously. When price doesn't overlap, as it didn't yesterday, or wait a second here, yesterday, it's excluded, right? We're going to now, you see this little white nub right here, that's where we're trading now. So we are almost going to open. We're just a point away from opening higher out of range again, another gap up. We had a gap up, a gap down day before yesterday, from the day before, and didn't close it. And now here we are again. You see something here. Yeah, 25th. You'll notice the information chart here. When I scroll over these, you can see high, low, close, date, all that stuff. So that's where we are, and that data pushes automatically to bookmap. The session prices up here automatically push to bookmap also. We're real light volume from the looks of it, and about 0.26% green, but only after this last number. Percent change. What's our volume look like right now? Oh, 132% for this time of day. So that big burst of volume down there helped a lot. We're clear down to 3.0 on the actual true range. Let's look at bookmap. Oops. Hate that when it does that. Let's look at bookmap. Well, here's all that volume we were talking about. There's no volume, and here's some volume. All on the number. Now, here is yesterday's high, RTH high, and here we trade now. I hate it when it's so close to the cusp like this, but let's get on with it from a different point of view. Here's the micro composite. Well, first of all, this is the dome, obviously, and it's level 2. Pretty obvious. I hope you know what that is. If you don't, then that's a big problem. This is the order book, resting liquidity, resting bids, resting offers. And these prices are 1 point increments, which means there's 2 ticks between each one. I try to keep it that way so I can have a good perception of scale. I want to make sure I have the entire session in view. That's the reason for Blue Boy over here. And I want to have about 1 point. That lets me know what kind of relative movement we're having. This is the micro composite chart, which is data that I input manually into this column from my micro composite chart. It's not automatic. Naked volume point of control from the 24th. There's the gap high from yesterday, again, or day before yesterday, that we didn't close in an RTH session yet. And some volume points of control and the whatnot else. These are the high and low volume nodes, which are pushed automatically from IRT to bookmap here. And this is the full session volume profile, which started plotting last night at 1700. This is the RTH volume profile, which will reset this morning at 8:30, or hopefully, fingers crossed. It's been giving me trouble lately. I think it's to do with the difference in clock between the data provider, which is Rhythmic, and my computer, but we'll see. Anyways, close enough. And here is my important notes column. All of this is entered manually by myself. First of all, I look at where I determine the open type for the day expected for this upcoming RTH session. And how do you do that? Well, it's real simple. If we opened right here, right now, how would that open compare to the previous RTH session close? Well, it's higher than the close, isn't it? Yep. And how would that open compared to the previous RTH session range, which is there's the RTH high and the RTH low is way down below us someplace. That would be higher out of range. So this would be likely higher out of range. Then I changed the title to just that. So we opened gap low yesterday, and now we're going to look like very, very possibly open gap high. The thing that I hate about this kind of a thing is between now and 8:30, this could easily drop down a point and be in range. We'll continue on. Next thing I do is clear all the notes from yesterday. There they are. Now we are free to enter the statistics based on the open type and associated with the session prices. First of all, let's talk about those price lines. These are pushed automatically from bookmap to bookmap from IRT. And there's nothing magical or mysterious about anything I do here or any of these levels. You'll notice that there's no indicator on my bookmap or my IRT charting. There are only a couple of 3 lines, and they all make common sense. Everything I do is based on probability and data. There is a POC for the full session here, and there's a POC from the RTH session someplace around here, wherever that went. Way below us because of the gap up, because of this big pop up. The POC is nothing more complicated than a marker at the for the price at which the most contracts have traded so far in the session. So far in the overnight session, we've traded 3,389 contracts. The very split second that any one of these prices is 3,390, this yellow line will move there. That simple. There is a VWAP for the Globex and a VWAP for the RTH session. That's volume weighted average price. And I guess you could argue that that is an indicator because it's calculated. But it's calculated pretty much by the system, and you know, I don't consider it an indicator anyway. And there's a mid for the RTH session. A line that can sometimes confuse people, or two lines or levels that can confuse people, are the IB high and the IB low. Because of their naming, IB is an initial for initial balance, which comes from the market profile days. Just forget that. What these two levels really represent are the high and the low of the first 1 hour of the RTH trading session. No more, no less. That's it. Just a marker of the high and the low of the first 1 hour of the RTH session. The minute the RTH session opens, this line will jump to the high of that and continue to move up until the end of the first hour, until 9:30, and the low will do the other opposite on the bottom side. That's all there is to it. So let's think about the statistics now, which come from this chart, this study, I should say, in IRT. IRT graciously highlights the correct open type after we open. So this was yesterday. Let's say we do continue to open higher out of range, which is we've determined to be the case. That's right here. The study looks back at 2,000 days, 1,998 days. Of these days, we opened higher out of range 514 times. Of the days we opened higher out of range, price revisited the overnight volume point of control 80.7 times. Now, I happen to know that the volume point of control is living right under here now. You'll see that right there, overnight volume point of control. So that's 80.7. And that's as hard as it, it helps if you get them lined up, I guess, doesn't it? That's as difficult as this gets right here. And now the next thing to do is go down the list, go down this list and pick out the next one. Overnight high, 78.7%, 76.7%. Overnight high, 76.7. Easy, huh? First of all, I'll keep going here, but anyway, we have the previous high is 65.8. Remember that these are just probabilities. These are statistics. They are not hard, fast lines in the sand. And remember the most important word you ever hear, IB high. Ah, great, 65.4. All right. Here's something that's important for you to do, 65.4. IB high. Why do I type the initials? Remember the definition. The minute we open, this flag is going to suddenly jump to the top of today's session. And I'm going to be going, what the hell was 65.4? Ooh, it's the IB high from yesterday. There we go. Huh? See how it works? Don't you love it when a plan comes together? Overnight mid is 65.0. Overnight mid is somewhere around here. Right there. Now, be sure you remember that these are just statistics for the amount of the probability or the times, the percentage that this price level was revisited looking back over 1,998 days where we opened higher out of range. And this brings up probably the most important statistical fact that you hear every day and likely pay no attention to. I'll try to keep going here now. Let me go to the previous close, which is 47.5. And that statement is, past performance is not indicative of future results. Most people consider that as some lawyer boilerplate BS that was dreamed up to present lawsuits. It's really one of the most important statements and concepts in statistics. Whatever has happened so far is meaningless compared to, has no impact on the outcome of the next movement of this price ladder or this price, our trade. The outcome of the next trade is 50-50, and that is an absolute fact. Jack. Now, I'm going to move on to something else I do and get back to this pre-market here in a minute. Every day I do a snap at a specific, I do two actually. I do 2 snaps a day for a place called the Traders Lab. What is that? Well, it is a bookmap Discord chat room started by a guy named Tom B. And hope I didn't do that snap wrong. No, I didn't. Okay. And every day I post 2 snaps. Around 6, I post the reports for the day. And at about 8:20, I post this, which gives all those folks in there all the levels and some sort of a continuity for how we've been trading for the last few days. And that's just my way of contributing a little bit to the work that's done over there. Now, the Traders Lab is the only of the bookmap Discord areas that I recommend, because I certainly haven't been to all of them. I have been to 2 others, and they were just straight up typical internet stuff. The third word out of the guy's mouth was trying to sell you something. The Traders Lab is unique in that it is free, absolutely free. You don't even have to be a subscriber to Bookmap. And you will never be solicited by anything, or for anything, excuse me. And I believe that Tom is actually what he says he is, which is a professional trader that's been at this for 46 years. And I like what he says. I share his risk management philosophy, and there's a good crew of people in there also. And many of them are here, and I'm in another one that's a private thing started by Rod from there. Now, Tom doesn't call trades live. He doesn't trade live, certainly not like I do here. He doesn't, he does interact via the Discord chat most of the day, but certainly not a stream like this. And so there you go. You're never going to see, something of his account, I'm sure. And I don't guess you're ever going to see a wrapped Lambo or a gold chain either, nor will you hear. But yeah, I appreciate what I got from the Traders Lab, and I will continue to be a supporter. It's the only site I recommend besides here. There are some after hours or something from the experts, a recap of the day on Tasty Live, which is pretty good. If you want a concise synopsis of the numbers and an overview. Options based though, so, take it for what it's worth. All right, we're going to open here now in about 6 minutes, and I'm going to get back to what I was doing, which is the follow up with the pre-market. All right. Now you see we've traded almost down to where we're higher in range rather than higher range. One tick below here, and that technically will be in range. I'm not going to put any more statistics in until we know the open type. I don't ever change the basic statistics, and you've seen how I do them, so you know that they are not something that I cook up on the fly. But when we're going to open either in or out of range like this, I hate it when we're right on the cusp, because then I have to change everything. So I'm not going to put in a whole bunch of stuff and then change it. Let's look at what I would expect for our initial trade. Typically, until right here, now we're back to here. Typically, when it's this kind of a situation and we're near the highs of yesterday, you would expect there to be some bit of responsive selling to take profit, and or that it will be an open auction. These markets have been so crazy lately, though. It's kind of, it's always a coin flip. It's always 50-50. But what you try to do is look at the higher picture and anticipate. Now we've just set a new number. We're going to open in 4 minutes. Here's our higher time frame. We're just above here, which means we're just going to open a little bit above this MCVPOC, which is right here. It was traded over yesterday, so I've set the text to black. Whenever a number is revisited, I set the text to black so that I know that that's been the case, and then I can remove them overnight or on the weekend. What else? Well, I pushed these statistics and these session prices, or the session prices anyway, freely. They're continual from 1700 on Sunday night through 1600 today on Friday, and 24 hours. If you could use those levels, let me know. Subscribe, like, and drop something in the chat, and I'll hook you up. A lot of people in various Discord areas or sites use them. Free, no problem. Here we go now. We're going to open higher, but in range. You see this? And we've got 3 minutes. So this is going to change to higher in range if we stay down here for the open. I hate it. I mean, just because it's annoying to me with my numbers. I'm just OCD enough to want to have this stuff be all correct, and especially on the stream, which is a permanent record. But, this is the market. This is the joy of trading. Are we going to open higher in range, higher out of range? I'd say we're going to open in range, because they look to me like they got that irrational exuberance out of their system with the PCE numbers. And I will caution you to really, really, really stand by for the Michigan numbers at the top of the hour. We're going to open now in about a minute and a half. I'm really excited to see what's going to happen here. I'm trying to figure out why in the hell this profile is so much different than I expected it to be. This is definitely not the RTH profile from yesterday, because there's the RTH high. This high should be right here. It's got to do with this reset, and it's just irritating the crap out of me. We'll see. I'm going to send Bookmap a Nastygram ticket and see if Elena's around. She's the one. If you get a support problem and you can get hooked up with Elena, she will fix whatever the problem is. She's really great and a super nice person. I've had less success with others, but she's fixed me up every time. Now let's see. You see, this reset 15 seconds early. Why? It's set. The session start is to be at 8:30. Does this mean my clock here is resynced to the time server at 7 o'clock every morning? Beats the hell out of me. So in a second, we'll see. I think we opened higher out of range, or higher in range, if I'm not mistaken. Pretty quick, we'll see a confirmation from my best friend at IRT, and I'll start to flag my micro composite stuff. Micro composite, my migrating volume points of control, and I'll explain why I do those in a second once I determine what we've done here. I think we've opened higher in range, but we'll see. Now, IRT will flag. I don't know how soon it does it, to be honest with you. Yeah. Okay. Higher in range. So there we are. Now I'll have to change some of those statistics around. The first of which will be the name. God, that's irritating, isn't it? The joy of trading. I do this, and I'm anal about this, because I want to have this record accurate, as you might imagine. So the overnight point of control is 83.1. And that went somewhere. Where the hell did that go? 83.1 right there. 83.1. The close, more frequent statistics, the point of control, the mid, overnight mid, those things are usually fairly close, 80 to 83. It's the outliers, like the overnight high, for example. Instead of, well, it's pretty close too, actually. The overnight high is 76.7. Wait a minute. How the hell could that be? Oh, my goddamn, it's the same. Ha! I don't think I ever noticed that before. You see here, overnight high, overnight high, there we go, 75.2. Overnight high, 76.7. There you are. I was going to say, wait a minute, that ain't right. 75.2. It's very close. But hey, if you're going to do it right. If it's worth doing right, isn't it? And now I'm going to do the next maneuver I do every day, and that is to set my new blue boy. This is worth $10,000, so if you're not a subscriber, look away. This is a vertical line I set at the beginning of each session, and I explained it in the pre-market, but I will do so again. This is just a visual clue for me. As the day progresses, I want to make sure that I can always spot this blue line if I can, and I can see that it's off now, and that'll drive me crazy, so I'll have to remove the drawing, and then I'll have to put it in there at a different spot more accurately, right there. This is marks the open, and I want to be sure I can see that at all time. That lets me know that I have the full session in view. There you go. That'll cost you $1 million. Just, subscribe and I'll send you my bank account. You can just donate. What is this now? Look at here. Wow. These guys are getting excited about something here. I don't know what. Something else I need to do now is change my charting from full session to the RTH only, which is right there, the day session. And I'll explain to you why I do that. So this is yesterday's RTH, and here we are in this RTH. Look at that gap. They didn't gap, but they sure go, right? Now we have a bit of an overlap here so far. And we've closed that gap from yesterday, looks like. So I will start a new profile around here over the weekend for Monday, for Sunday night. The reason I changed the session prices to the session views from full session to day only. Come on. Come on, IRT, you can wake up. It's not a big deal. There you go. I also plot the same layout for the micros. Naked volume points of control there. We'll turn them off. The reason I do that is because I push the levels for the micros also, so some folks need those. And save that. Okay, the reason I changed the plotting from full session to day session is to keep the relationship between value area, high and low, and developing value area, high and low. Now, the value area high, ooh, look at it. We have the VPOC shift already. Look at us go. The VPOC, or the value area high, here, is for the previous auction. The developing value area high is for this current auction. So if you think about that for a minute, during the overnight, up until a couple of minutes ago, this was accurately, the value area high and low were accurately reflecting the previous RTH auction. But the minute we opened this RTH session, this would suddenly reflect the overnight because it was the previous auction. So I changed the charting in IRT to reflect days only. That way, the value area high and low accurately reflect the previous RTH auction. And that is for the folks that track and use my levels, my session prices. And me, I guess you could say. But I know the difference, so it wouldn't bother me that much. Well, that's kind of interesting, huh? Why did we do that, do you suppose? Everybody's excited. Irrational exuberance. And here is our overnight volume point of control. I'm going to scoot this up a tick so it's properly aligned. Yeah, well, that didn't work very good, did it? Let me see what other levels are discombobulated over here. I'm going to be looking at my session statistics here and just confirming I've got the correct numbers for this hiccup we had in the open where we were being higher out of range expected all day, and then suddenly it dropped down a tick and we got higher in range. We got this crazy Ivan down here and they're continuing to go up. Our initial balance high and low are accurate. That's pretty sweet. We've closed yesterday's gap officially, so I can shut that bad boy down. Change the text to black, remove yesterday. We'll remove whenever. Yeah, now we're going to do something else. What is that? I don't know. Where the hell are we? Overnight mid. What do we got going on now? Ooh, mid, overnight high, 75.2, yep. Previous high, 71.2. This is kind of mute. You see how the previous highs went from 65.8 to 71.2% of the time. That's because we changed from higher outer range to higher in range. Overnight, a previous high right there. Where'd it go? Where'd it go? Where am I? Am I losing my mind here again? Oh, previous high. What the hell am I doing? Previous high is 66.5. 56.5. Wow. Really? Previous high, higher outer range, you see over here is previous high is 65.8. Previous high when we open higher in range is 56.5. So I'm completely screwed up here. 56.5. And again, these ranges have already been, these levels have already been revisited, so that's over with. But I'm doing this for the record. I don't know whether it's even worth it or not, as fast as they're changing. We've already tagged out the overnight high, too. Look at there. Well, there's irrational exuberance afoot, boys and girls. That shouldn't be a big secret. Look at that crap. Here we are. Here we are. And here we are. Well, okay. Yesterday, I've been covering my backtesting journey here on the stream in the evening, later in the day. I noticed something quite interesting yesterday when I took the setup for the IBC, which was justified and correct, but it was not following the current rules in my backtesting, and so it was a full stop. If you haven't seen that, 24 ticks, no big deal. The outcome of the next trade is 50-50. That's the best you can do. That's why it's so important to do statistics and to get the overview in terms of probability and the law, and allow the law of large numbers to work for you. But let's get back to the story. I noticed after the fact that it did not satisfy the current backtesting rules that I have set in my backtesting for the IBC. The IB failure did follow those rules and went on to be a screaming success, both targets. Actually, more than both targets, quite a bit. But I didn't take it because I don't believe you should change your trade plan or any of your rules during the live trading session. That's to be done with your homework after the session. Your trading as a business, the success or not of your trading business has got to be based on a large data set of trade occurrences, not the next one. And what is all of this? Wow. Notice how the line of the IB is now above the flag. That is absolutely expected behavior because the data that drives this line and this flag is identical, and it's pushed at the very same time because it's one data point pushed from IRT. The problem occurs, you see how they've aligned now? The problem occurs within Bookmap. It only allows me, the minimum refresh time it allows me to set in the Cloud Notes column is 1 minute. And the boys and girls who programmed this line indicator, which is purchased from Bookmap, is obviously less than 1 minute. So they get out of sync now and then. And I used to go, what the hell is that? And then I realized what the deal is, and I don't care. But I think it's worth explaining so somebody else doesn't go, what the hell is that? Okay. What am I doing here? There we go. Is this, yeah. Okay, get away from that. Where am I? Okay. You see the brighter POC here? Let's do this. You see the brighter POC? That brighter yellow is for the RTH session. This one, the more muted yellow here, is for the full session. I know I should probably do something about that, but most of the time they're overlapped. Now this jumps up, and how does that work? Well, here you go. Right here, there's about 4,400 contracts traded, and that's the most in the full session. At the moment, 3,000 or 3,500 is the most contracts which have traded in the RTH session. The second that this one level is more than 3,553, the minute it's 3,554, this line will go there. And I suspect they'll go further up before they align again, but you never know. If I kept all of this a secret and didn't show you this, I could sound like, Gandalf over here. Well, I expect we're going to have a VPOC migration in another two and pick the price, right? And it's just simply math and numbers, data. How many contracts have traded right here? Are we getting close to that? The minute we get close to this number, you can expect price that the POC is going to migrate. It's just that simple. I get so frustrated with all these hocus pocus people and the rearview mirror guys, traders. I can tell you what the secret sauce is, what the holy grail of trading is, and I will explain that later. And that's I'm not being coy. It's just because I'm watching something else now. And I do it every day, and it's in the stream. And it's evolved. It is the truth behind developing trading as a business, not as a video game or gambling. And you'll see a timestamp every day in the stream for that. It says exactly, trading business is statistical, not video game. That is the actual title of that timestamp every day. And that is truly, I should change it to the Holy Grail, probably. It is the truth. It is the Holy Grail. There's no question about it. And that's the agreed Holy Grail by the most successful traders in the world, current and past, from Jesse Livermore on. And I suppose, somebody that was a grain trader in Egypt probably figured it out. I know absolutely that the whole story with candlestick patterns and all of that is the samurai got paid to do with the rice market in Japan back in the whenever the hell it was, 16th or 17th century or something. And they're the ones that developed the market, the rice market, and those candlesticks. There you go. There's a tidbit of useless information for you. The Dojima rice market. Good morning. Vietnam. Vietnam's a great place. My wife and daughter are Vietnamese. We lived in Kuala Lumpur for 11 years, back to America. I moved back to America. They had never been. August. Wow, it's just September 26th. August 21. After the COVID thing was winding down, we had to get up at 4 in the morning and go to the hospital to get a COVID test and the certification paperwork for that before we could go to the airport and get on an airplane to fly to Dubai and then on to Houston that day to be allowed on the plane. Boy, there was a lot of interesting stuff in those days, if you remember all of that. Well, there is our no, that's not the 9 o'clock number. Wait a minute. Somebody said something there. Anytime I see this kind of reaction, that's news, in my opinion. So I immediately check the news feeds. And I'll do that right now for you. Now, I don't really see anything, but I'm sure that had something to do with it. Here is the financial juice. You see that this is kind of like a squawk box over here, and they do put in the market on open imbalance, and then at 1450 every day, there's a market on close imbalance. You read these numbers, this would be a buy side 269 million on the S&Ps, negative 16 million NASDAQ, et cetera, et cetera. And on the market on close, oftentimes you'll see billions of contracts. Order imbalance. So we'll see what happens with our number here in 8 minutes. I don't see any news that caused that bump, but let's go back over here. Like I said, these are free. I don't pay any attention to these ads. It doesn't bother me in the least. I look at this, and this is what counts. If you want to see what's going to happen next week, here are all the numbers that you can expect next week. It's really handy, I think, and free, you know what I mean? Free is good. As Tom's mom says, free is good. He's got some great Tomisms. So we'll jump back to this when we get approaching that Michigan number at 9. Something happened here, that's for damn sure. Somebody said something. This is not a political statement in any way, but this is a statement of fact. We are in an environment now where we have an unrecognizable or unidentifiable potential critical risk to our markets and our auction at any time. And that is the random who knows what statement that could come out of the few folks at the administration that are pretty fond of microphones and cameras, or various social media things. I'm not making any political statement, it's a fact. If you are a project manager or a trader or any kind of a business person, you continually must be aware and identify risks to your business and have a mitigation plan in mind so you don't stand there like a deer in the headlights. We look at the numbers and plan for them every day. We're waiting now for Michigan in 4 minutes, right? We do that for a reason. We do that because we don't want to get blindsided. We know that the most important criteria or mission for a trader is to preserve your account. And when you can't identify those risks, when they may happen or not, that's critical. And that's the world we live in today. So I think that to me, that says limit my risk exposure to the market as much as I possibly can. And that means only trade A plus, guaranteed, I mean, not guaranteed, but A plus vetted setups. If you think that being a scalper or a gunslinger is a good thing to do, I suspect you're going to find that that's not correct. We got 4 minutes or so here till the Michigan number. Am I going to trade that? No, of course not. I'm not going to be in the market during that. Here we got an iceberg of 40 contracts down here. What do we have for liquidity? 202 at 99.75. That liquidity's been laying in there a while. You see how this liquidity is graphically represented here in the heat map. All these heat maps levels are a graphic representation of level of liquidity in the book. If you don't have a problem dealing with numbers and stuff, you can trade just as accurately off the dome. That's how traders traded for years. They didn't use charts. There's a funny story about that. I'll tell you after the number comes out. You can see when we had that 200 came in the market at 8:36 and 54 seconds, pretty much. And there's that 200 lot laying out here. Simple. There's $1.30 came in down here to kind of put a floor into this. My question is always, is this a floor? Is this going to be a lid on the pot? Or are these guys going, come on, come up here, trade up here? Is this a target? And I'm not sure I know the answer to that question. One thing I want to do is make sure I've got the session in view. I'm about 1 point wide or high. And here we go. We have another VPOC migration up. Isn't that cute? Now, there's a bunch of people that think this is a great statistic to trade. And I will vet it and backtest it, but I can promise you that my testing is it's not. And we can talk about why later, I guess. But there we go. Isn't it cute how I was able to get that figured out? A minute and a half to the number. A minute and a half until that number. Michigan Consumer Confidence. It's the University of Michigan Consumer Confidence. 1 minute. I am not, I probably shouldn't say anything. Consumer expectation is actually the number they call it. $30 seconds. I'm not sure which of these news feeds puts out the number quicker, investing.com or Financial Juice, to be honest with you. Boom. There we go. I guess it was right on the spot. So it's a miss across the board. Or it went down across the board. inflation expectations, so that would be a rise. Okay, that would be an input up for the market. Except how can consumer sentiment pulling back from 58 to 55 be good? Is this a buy the rumor, sell the news? Where the hell that goes? That's my problem. I can never remember which is which. Well, there we go. There's our number. And now we just have basic Friday stuff. Baker Hughes rig count, FO, talking feds and whatever else. So that's the numbers. I think what are we doing now? Well, there should be no hesitation in your mind as to what the context is for the day so far. Okay? If there is, then you need goggles. Get your glasses fixed. We've got 1, 2 VPOC migrations. Trade them or not, I don't do it. But here's our open, and here we are. What is the context so far for this day? North. Up and to the right, eh? There you go. Higher time frame. Market profile. A little bit, as usual, a little bit more radical, but basically the same idea. Yeah, not really. The NQ did have a pullback at the open. Not much of one, but it did. A little bit here, I guess. And up we go. Will this hold? Will they get a bunch of people long and then jerk the rug out from under them? Beats me. I am, as I have said over and over again till I'm sick of it. I was really, really hopeful that trade yesterday would be a winner. That would have put me over the hump on these 5 trades. Oh, you know what I didn't do? I just realized what I didn't do today in my pre-market. I knew there was something. I didn't set up. I can't trade. If I tried to trade right now, nothing would happen. How stupid is that, eh? In order to trade with Bookmap, you need to activate the trade control panel and select a way that you will interact with the system, with the application, to trade with your mouse. If you choose chart, the only place you can trade is this active data column. If you choose dome, the only place you can trade with the mouse are the dome columns, and both is both. I then use multi-brackets. And here is the risk-neutral trade management system. This is the smallest package size you can have, which is 2 lots, 2 contracts, because you need an even number. You determine your stop size for the package based on your account risk tolerance, volatility of the market, whatever you use, but your account risk should definitely be the first and most important factor that you look at here. Once you have determined this package, the first risk neutral scale, or the first profit target, is automatic because it is for half of the package and for the same amount of ticks positively as the stop is a negative. And then you have the runner. You can have 4 contracts. You can have 4 contracts in high volatility. These are things that I've just worked out myself, so you need to do that yourself. And then the next thing I do is do the multi-account trading, which is here. What this does is when I take a trade here, it automatically pushes that same information or copies that same information to 4 other accounts. Now this, so now we are, let me continue. So now we've got our bracket set up. We've got our multi-brackets going. We can trade. I confirm the package size. And notice the metrics here from the trade control panel are the same as up here. I don't need any of these bracket orders to be in place in the trade control panel, so I can re-click this button. Trading functionality remains on. I get my real estate back on the screen, and I have the same metrics. I have cancel all and I have close all up here. I'm all set to go now. How stupid was that? How did I miss that in the pre-market? I was all busy worrying about higher in or higher or low, higher in or higher out of range. Crazy. And you see what happens with our everybody let's get long. Oh, well, wait a minute. There's 20 points. Pretty quick, huh? Yeah. The Michigan number wasn't any good, by the way. And guess what? Let's keep an eye on our session. We're getting right back down to the start, to the open. And we've just rolled over 9 o'clock. Okay, so where I was going when I discovered that my error of not having my trade control panel started, that's a good reason. Though. There's a perfect example of why you do a mental scan. I've rolled over 9 o'clock. The trades that I am vetting and what I am working on now are the IB trades, of which there are 2. We're within 30 minutes of that IB statistic being active. And so I start thinking about getting ready to trade. And I cannot do so. So that's good that I figured that out. One other thing that I forgot to mention in that when I was setting up the trade control panel is you can trade with your mouse, with your keyboard hotkey by using hotkeys in Bookmap. And you can do that in both configurations, whether it's a chart or the dome. However, you have to first you need to turn it on and set up the hotkeys. And then you need to make sure that the computer focus is on the application. If you've got more than one screen and you clicked on something in my case, I clicked on something in IRT on the other monitor there, or one of the other monitors, or, my third one over there. You hit the hotkeys all day long, nothing's going to happen. I believe that trading with your mouse, and why I'm trying to get good at it here with Bookmap, is I believe that trading with your mouse on Bookmap is much quicker and more accurate than the other options. The dome's pretty close, but you need to set up your configuration different. To look over here at the dome takes my focus off the media chart. If I'm looking right here, I can get long, short, or long, or whatever it is. And it's easy. Be very careful. If you have the chart trading activated, if you accidentally click over here for any reason, you see how the mouse changed to a $sign from an arrow? If you click right there for any reason, you've got an order in there or a trade that you didn't plan on. And as you can probably tell, I've done that more than once. So it's just part of, like anything else, learning to fly, learning to sail, learning to drive a car, learning to walk, whatever it is, you gotta learn. And there you go. It's a skill to develop. Okay, so we're at 9 something or another here, aren't we? 9:10. Everybody that got irrationally, exuberantly long and is, oh God, we're going to the moon, oh, is hammered. Yeah, well, isn't that fun? How those longs working out for everybody? Let me just say now that make a comment about, come on, man, not having the not having my trade control panel activated. That is that's a result of not being 100% in the game, right? So that's a bigger error on my part for not recognizing that I was off a little bit, on tilt a little bit. That's really important. I've talked about that a lot, but it's really important. We all, as traders, we make such a big deal out of, ooh, I've got a 95K something or another monitor and all this kind of crap, and charting this and something else that. The most important element of your trading is on your side of the monitors. If you are 100% in the game, you're the one that's making the decisions. So take that on board. If you're on tilt for any reason, and what is that? What am I saying? Be aware of you. Be aware of your thoughts. That boils down to the same monkey mind thing, which I'll talk about later instead of time stamping them now. But, all the FOMO, all that kind of stuff is, you've got to be aware of all that and not act on it. Remember, this is my journal and I'm talking to myself. I believe very strongly that our subconscious mind, our subconscious, whatever you want to call it, firmly believes and listens to what we tell it, specifically what we articulate verbally, out loud. Oh, God, I just can't stop overtrading. Oh, Jesus, God, well, what can I do to stop overtrading? Boomer, can you help me? Well, the first thing to do is stop telling yourself that you overtrade. That's first. Same idea, that's an example, but there you go. And you'll be amazed at the number of times that I hear that exact shit from, nice people who are intelligent, successful. It's got nothing to do with it. There's something about the psychology that happens when you're trading that turns people inside out somehow. Or just not inside out, but just they forget who they are in reality, and you're an adult. Come on now. Look at us go, baby cakes. Ooh boy, we got one buying wick going on over here, don't we? Ooh, my. Oh. And boop. I don't know why that continues to do that, but it does. Yeah. Well, if you got long and then you got short, good for you. I suspect that you're a rearview mirror trader and you're completely full of bullshit. But no, that's not true. There are several guys in Static that were talking about how great the VPOC migrations have been. It's not a trade that works for me or, Antonio or some of us here, but it will be one of the next trades I will look at vetting. And now we're at 9:15, so let's get around to my potential trade. Remember that I said the idea is to keep the entire session in view, keep a real good perspective on context, and then when it comes time that I anticipate interacting with the market, I can zoom in as, with Bookmap, you can get in so tight you don't even know where you are. Let's look at this. Look at this trade right here. Okay, what's happened to the market? It's going by so fast I can't see the timestamps down here, but who the hell can trade stuff like that? You can get in as tight as you want. That is, I don't know what that is. That's 1 second. This is going by 1 second. So that is microseconds a minute ago. You can get as upside down as you want to get with Bookmap. I don't find any use for that, but there you are. Now what I do is I stay with a firm understanding of context, keep my levels in view, and work on a vetted trade. The trades that I am vetting at the moment are the IB trades, of which there are two. There is the IB failure, which is essentially a mean reversion. And there's the IB continuation, which ought to be pretty obvious. Now, you have to remember that the IB trades are not a thing until there is an IB statistic. And that's not a thing until there is the first 1 hour of the RTH session has completed. At 9:30 and 1 millisecond, the IB statistic will be active. And at that point, I start watching closely for the IB statistic to be accomplished or whatever, set or whatever, or not set, but taken. Two things happen. At 9:30, the IB statistic is set. In other words, the IB high stops going up, the low stops going down. So the IB statistic is wherever those two levels are. When price exceeds them, the IB statistic has been satisfied. At that point, I determine which of the two trades is more likely, and if neither one, then I don't take either one. Yesterday, I took the IB continuation because I thought that looked to be completely set up and satisfy my rules. And the outcome of the next trade's 50-50. Was a stop after a while. Let's see what the IB statistics are, if you remember any of that. Let's look back at our chart, at our homework study, our statistic study. It is a greater than 97.9% probability in all four open types, see here, that the IB statistic, which is the IB high or low, will be exceeded by price in the balance of the RTH at some point in the balance of the RTH trading session. In the current open type, which is higher in range, it is a 98.0% probability that the IB high or the IB low will be exceeded by price at some point in the balance of the RTH trading session. What the hell does that mean? Well, it means the following. After 9:30, this level or this level will be exceeded by price between 9:30 and 1600 this afternoon. That's the IB statistic. Now, I have a couple of we're now at 20 minutes, right? Okay, so this is a really important one, I believe. Do not trade toward the statistic. We have not, first, the statistic is not set yet. Second of all, then there's no possibility that we have taken the statistic or satisfied the statistic because it doesn't exist yet. However, oh, baby, we're below the VWAP, we're below the BPOCs, we're right close to the IB low. We're going to take that IB low, and they get short. You get short, we get short, I get short. And then you immediately get salt pounded in your ass because it's not a statistic yet, and the market turns around and goes the other way. And it's only got in my case, I'm using a risk-neutral package is 3-point stop and 3-point risk-neutral scale and a 40 or 12-point risk profit target. Now, what's going to happen if we come down here and take the IB low? Nothing. The IB low is going to go down further. That's not the statistic at all. Remember that the IB low will continue to go down with price and the IB high will continue to go up with price for the first 1 hour. And I use the previous caution, don't trade to the statistic based on my own statistics, my own data. And what the heck is going on over here in a message log? I don't want to search anybody's message log. There you go. Make sure I didn't tip everything over here. Everything looks okay. Those are just, truisms from the road. I've been standing here in front of these monitors, not these exact ones, of course. That's it, whatever you call it. I started trading in 1999. I didn't do it consistently. I lost my ass originally, but I started looking at the screens and being aware of trading packages and all this kind of crap. Oops, I almost made a mistake. Do you see the mistake I made? Almost. You see how this is the muted yellow? And this is the full session volume profile. Now, here's the RTH, and let's look at this. It's 4,288 contracts. The very split second that 6671 says 4,289 contracts in the RTH session, this VPOC is going to move right here. And I predict that that's going to happen in about, we got a ways to go yet. We got 1,800 contracts up here, so it's not going to happen real quick. But you see the point. You see how tough it is to be a fortune teller here. There's the, what happened there? Well, what happened there was we've just extended the IB lower. That's all. That's not the statistic. That's not anything. This will go down. This flag and this line will move down and eventually get down here. At 66. Ooh, the devil. 6666, isn't it? Oh, I guess it's only 3. There we go. Now, we're 25 minutes. We got 5 minutes left before the IB statistic is a thing. This is not the IB. They're still bringing it down here. We're almost down to a 47% probability. Look at this. What's this down here? That's the overnight volume point of control at 83.1. What an amazing thing is going to happen. That highest of all statistics is going to get taken out here pretty darn quick. Or not. The VPOC migration is becoming less imminent because we're getting excess down here. We have to get one of these levels. This would be the likely suspect. One contract higher than whatever the hell that is, 45.23 or whatever the actual price is at 95. Remember that I have these not at one tick, at one point. Let's see what happens if I can get them up to. Now there's a point high. And the session wide. What have we done here? Well, we've pretty much done a rotation. You could say that we have two distributions. Rotational day. Huh? No more news coming up unless there's some random crap from Einstein. Agent Orange. There we go. So we took out that highest of all probabilities. Every day the overnight volume point of control is the most high probability, the most probable statistic to take out. And I can close this off too. Oops. That was closed out yesterday. And they're going to just keep selling this baby down until the cows come home. 3 minutes until the IB statistic is set. If you're not trading the IB stats and you got short up here because of whatever reason, good for you. That's one hell of a trade, huh? 30 points, 20 points. 40. What am I talking about? This is 7. 30. This is 67. We're down here at 60. 66, 60. That's 40 points. Boy. Boy, oh boy. There's our open. Settlement. VPOC or EVPOC, overnight volume point of control. And we still haven't set the IB yet. This is a hard one for me now because this is a directionally, the profile appears directional. But we've had some pretty violent swings both directions. I'm not sure what to think about it, to be honest with you. Oops. Sorry about that. Well, this would be a great day for a nice successful trade. Always nice to have that on a Friday. Oh, man. Okay. Now the IB has been set. This will no longer go lower. That will no longer go higher. But we have not taken the IB statistic, has not been satisfied yet. This is a real dangerous place to trade to the statistic. Oh, we're below all of these guys. I know we're going to go down here and get the IB low. Yeah, we might. But we just look at what happened up here. Boop. All the way across the range. Be real careful. And I certainly am not saying that we're not going to take the IB low statistic, but, well, I've said enough. Don't trade towards the statistic. I don't have confirming data that that's a good idea. If you do, knock yourself out. But I would definitely say that if you are not at a point in your trading where you are capturing data and you are trading based on data and statistics or probabilities, then you better start thinking about that first rather than, having a 9K monitor and curved something or another and a special high speed clicking mouse, because that's not the point. Let's keep an eye on our IB statistic down here now. I don't like these big ranges because then I just barely keep one point here and the session. A little bit further, then I can't keep the whole session in view with 1 point, and that's irritating. What do we think will happen? Let's do a quick scan if Agent Orange and Company or whoever else is. Ooh, look at how that is. Crypto is falling out of bed, baby. Well, we have our University of Michigan numbers. We've got a talking Fed. Fitch rating. Don't see anybody. What is all this noise? Cursed Hammer, okay. I don't see any. And that's kind of scary, but there's no scheduled administration input here, which can be a good thing or can be scary, right? Now, Trump is not traveling. He's back in the States, I think. Let's hope he's, worn out from his trip to the UK and busy going to go golfing or something. And again, it's not political. It's just some random stupid shit like, Tylenol causes autism. I mean, based on what? No study, what a huge thing to say. By the President of the United States, based on no studies, trials, JFK Jr. is an admitted 15-year heroin addict. He purchased illegally and injected himself with heroin for 15 years. I mean, wow. And some nutcase doctor that they've got on board with that is admitted to getting $150,000 in a paper sack to put out a study. He admitted that. It's really crazy. Yeah, so I'm told. I mean, obviously, I don't know any of this firsthand, but that's where you go. So we have not taken the statistic yet. We did have a full session VPOC migration once again, but our RTH boy has not moved anywhere. I need to put some stuff in my eyes. They're all blurry here. And I would suggest that, okay, now I'm going to be at fortune teller. There's 43.87. The minute this gets over 45.5, there we go. There's our migration. Lower. You see how tough that was? Now that lends further credence to the fact that we may take this IB low as a statistic, but what has happened, as what often happens with the VPOC migration, we're going the other way. There's a there's a euphemism in the Tom has one about, well, what is, we may come up here as a price check at aisle 3. Is this still too high? Well, Jesus Christ, that's all the way across the stream. That's all the way across the range. And that's very possible. Very possible. Where are we now? Well, we're at here's a previous one from early in the morning. Are we going to take the IB low? Probably. But it is definitely not something to have traded towards. If you tried trading towards it right here, you're stopped out without a scale. So, So there you go. Hey, Richard, what's up? I am just warning off trading towards the statistic rather than trading after it has been put in place. Yesterday was a IBC trade that didn't pan out, took a stop. The IB failure was really sweet, and I noticed that my, how to say it exactly, the trade I took yesterday for the IBC validated my previous rules, but was not valid with the new backtesting rules that I've developed. The IB failure, however, 10 minutes, 5 minutes later, very definitely qualified for all the rules and went on for the 48 tick target times 2. So I'm going to be real careful about those going forward. And here's an even better example of why you don't trade to the statistic and why you should be careful about IB or the VPOC migrations. And why I don't trade them. I hope everything's good on your side there, Richard. And it's, thank God it's Friday, right? The Michigan number's out. That was a big hoop-de-doo. Yeah. Back to the open. Exactly where we started. And my IB statistics, which I've got the one more to trade, or now 2 more trades to take, are in the hold until further notice. Those two guys were killed by lightning in Colorado, elk hunting. Too bad. I guess the elk got even, huh? So what is it, elk 2, hunter 0? We're going to get that price check at aisle 3, sure as hell. Peter's got a statistic, Peter K or whatever. It's a static. I think he's in the TLab. Has a statistic. It says he's, vetted. He posted a thing about how he vetted, hand vetted or something, his VPOC migration trade. But boy, I don't see it. I really don't. Be interesting to try. This little iceberg is chasing them all over the place. Seems like Bookmap is stable. Yesterday and today after the big MBO drama. I never saw one word, email, or anything about that. I guess they are going to try to blame it on Rhythmic. I don't know. Or maybe they figure that it's in the disclaimer in the contract you sign. They don't need to address it. I don't know. Maybe I didn't see anything anyway. And maybe it wasn't as big a deal to some people as it was to me, but I just shut things. I couldn't do anything. I couldn't get, the pop-ups were coming so fast, I couldn't disable anything to do with market by order to see if Bookmap would continue to work. I guess the one thing I could have done, I don't know who Paxman is, but cool. 30-second opening range on NinjaTrader. Hogue and those guys over on TopStep do an opening range trade on gold and crude oil every day, or they did some time ago. The first minute, they use minute, not 30 seconds. And that's, if they've vetted that out and they've got what's the statistic, What's the risk-reward ratio? Who cares about win rate? That's the biggest clickbait bunch of bullshit that ever walked the earth on its own. What's the win ratio? What is his R factor or win ratio? Risk to reward ratio, to be more specific. I have no clue who Paxman is, but cute name. Okay, there you go. Which pit? NASDAQ, bonds, corn, what? Those are all pretty... The biggest bond trader of all time were the Borsellino brothers. Forget the name. They absolutely the biggest traders, hands down by multiples. Completely. If you ever get an opportunity to watch it, there's a documentary or something about them. Really crazy. Their dad was a mafia guy, was taken out in a cornfield and shot by the mafia, and after he had gotten out of prison, and what is a real sordid story, but they ended up being sponsored by a guy who turned out later to be the mom's boyfriend, I guess, and whose name I forgot. They were hands down the biggest bond traders in the world. Oh, NASDAQ, okay. Does he trade the NASDAQ or the ES? Is that what he trades the 30-second open on? I suppose. Well, now if you're doing the VWAP to VPOC or any of those trades, I guess you got scaled. That's good. I'm still sitting here looking for the IB statistic to come, and I'll be honest with you, with this price action, I don't know, I wouldn't know what to do. The session profile so far would indicate, and I've got my sessions all goofed up, would indicate that it's directional, huh? But it isn't, is it? It's rotational. And we still haven't taken out either one of the statistics. We will, because in this open configuration of higher end range, there is a 98% probability that one of these two is going to get tagged between now and 1600. It would be kind of fun if we didn't. Obviously, if you look at the inverse of that, there's a 2% probability that neither one will be taken out. I don't remember ever seeing that. That'd be pretty interesting, though. Be fun. One for the books, one for the stream, anyway. Yeah, I would suppose NASDAQ. Well, you can get a lot of pretty violent movement on NASDAQ. So I guess he went short. And probably did great, I suppose. Does he do it like the way Hogan, those guys do it on TopStep, and the way I've traded the opening ranges? You throw a sell order under the low, and you put a buy order above the high, and then whichever one gets hit is the way you go, and the stop goes on the other side. And see what happens. That's a pretty impossible statistic to vet. Just thinking about it offhand here. But so he was the largest NASDAQ pit trader, but he does the opening range on something else. Interesting. Yeah, Hogan, like I said, Hogan, those guys trade, they do it on gold and crude oil, or they did last time I looked at that. TopStep TV, I don't do that. It's like the Traders Lab. I have nothing against it. I want to be focused here, right? The idea is for me to focus on my trading, and as a result, the stream, and so that's what I do. That's my thinking, anyway. Here we go. Boom, 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 boom. If you had to look at the higher time frame here, there's yesterday, here's today. What's going on in volume world over here? Oh, we're gonna head down. Oh, we took a look down but didn't get anywhere. That VWAP to VPOC worked. Volume is still high. Ooh, look at our average true range, way up. Got up as high as at 10.83. That's 10 handles in 1 minute. We're at 9.5 now. What does that say to you? A little volatile? Can you manage your risk in that environment? One thing you better be damn sure of is that you have I'm running out of room here now, and that's so irritating. You better be sure you've got your brackets in. If you're, if you subscribe to the manage your risk, protect your account theory, one would have to suppose we're going to take that IB low here at some point, wouldn't you? The NASDAQ is pulling down. We're down lower. Definitely not a situation where you would want to try to trade your statistic. Let's see if I can figure out something better to do here. Oh, cool. Well, that's about it. So we're still at a point. Okay. The price level here is still at 1.4. There's 4 ticks inside each one of them, or 2 ticks from one to the other. Pretty close, huh? Remember, this light blue gizmo here is not the last price. That is an iceberg. The last price is gray guy. That's the last price. That blue thing that almost got down to the IB low is an iceberg. The Borsellino brothers. Boy, there's a names I haven't thought of in a long time. Yeah. That's pretty much what Hogan, I forgot the guy's names over there actually. Hogan doesn't actually put them on, I don't think. The JD or whatever he calls himself does. Or I have no clue if those guys even still exist there. I don't know. Hogan's been a part of TopStep since it started, so I'm sure he will be forever. Seems like a nice enough guy. JD is one of those guys whose dad was a trader, and most of them are, I think. I don't know about Jack. He had an interesting story. They were talking about being on a prop desk one time and paying a desk fee. And whoever the company was that he traded for, his desk fee per month was $10,000. And the firm that he traded for had a whole crew of developers and proprietary software behind the traders. And it's the outfit that revitalized the microwave network across the northern part of the United States so that they could transmit their data via microwave from Chicago to just outside of New York to try to get that extra little edge with time. Imagine every Monday morning when you came, or the first day of every month when you came to work, you owed them you had a $10,000 desk fee just to sit at the desk. Nothing to do with profit to your thing. You had to make 10 grand for your desk fee, and then you could start thinking about your profit split. And obviously he was successful at it, so really good for him. Well, settlement seems to be holding its own. Anybody that tried to trade to the statistic has been stopped out a gazillion different times. And, there you go. on the wrong screen, I guess. So that's par for the course. Beautiful day here. It is something. My golly, it's cool. I don't know why that's not showing. That's 26. Air quality alert as usual. Today is my wife's birthday and our anniversary. So there you go. Lucky guy. Sometimes I wonder how the hell that worked. I actually set up a back test for that IB range thing for both IRT and also back when I was trying to teach myself Python. I didn't find any long-term statistic that supported it, but it could. As with any kind of back testing, you have to be sure that you're comparing apples and apples. The specifics of the code or the targets or the rules are really important, obviously. Yesterday was a real epiphany for me when I have no qualms about taking that IB continuation trade because it was per my established rules. It hit the numbers, but per my new back tested rules, which I've run back 500 days and stuff like that, it did not, which would have prevented me in that trade and that loss or that stop. And the following setup, which was the IB failure, checked all the boxes and went on to, of course, being a human and with my monkey mind, that's what I'll remember. Okay. All right. Thanks. I think my opinion, and I talk about it in the pre-market and whatever else, my opinion about this particular environment that we're trading in is to really be focused on A+ trades only and absolutely limit my exposure to the market or limit my risk exposure to the market under the circumstances. That's why I don't think scalping or short time frame stuff, or I want to be damn sure I've got statistics backing me up if I take an entry, are important. And we fast approach 10 o'clock here. Having no idea what that means other than we can tell time. Oh boy, I'm going to go reload. Get ready to trade there, Richard. I'm going to go reload my water bottle, so that usually indicates something wonderful is going to happen and that I'll miss. Probably going to be the statistic here. Let's see. NASDAQ is sneaking lower, so that might be leading the trail here. One thing that's kind of dangerous, in my opinion, it's maybe easier to see over here. We're getting that focus, right? Got higher lows or lower highs and higher lows. So this thing is winding up for something, I guess. Who knows what that something is, but where's that where's that iceberg would go away? I don't really care about 34 points. Let's see if I'm clever enough to turn that off. Stops and icebergs on chart. Boop. There you go. Now we can see the last price. We won't see the stops. We won't see that little annoying iceberg down there. I won't. Something else that I can't figure out how to do here, maybe somebody that's got Bookmap and knows can. How can I can't adjust the thickness of this clothesline. Ooh, clothesline. There's a term probably a lot of kids don't remember or don't know. I'd like to make this gray line not so heavy and blurry, but I can't seem to do that. I don't know how to get that to work. I have not found one. I know how to set the color, but I don't. And if you right click on it, and I got to be sure I don't click over here. If you click on it, it doesn't do anything. And I'm not gonna get myself in a trade I didn't mean to by accidentally clicking over here, which I've done way too many times in the past. Yeah. All right, what happened? Nothing. Oh, man. Usually when I go reload the water bucket there, all hell breaks loose. Oh, okay. Welcome to the stream. If you're new here, throw something in the chat. Richard and I get lonesome. It's a lonely sport, eh? You need to be aware of that. And Also, that there are 3 positions that are valid in trading, and that's long, short, and flat. And if you're approaching trading as a trading business, as am I, it's not a video game or gunslinging or an adrenaline rush. You spend a lot of time waiting and flat. Apparently, according to interviews with some of the, 8-figure traders and stuff, that sometimes, they go days without a trade. And I have, but it's been more based on vetting trades and paralysis by analysis. But I'm determined to fix that problem. I'd like to get to a situation where I believe it's reasonable to expect 1 or 2 setups, vetted setups per day, and to then execute 1 or 2 trades a day. My thinking, it goes like this. I am vetting setups. In this case, the IB continuation and IB failure trade, the 2 IB trades. Once I have those vetted and the statistics analyzed that that they are valid to do, then I'll move on to vetting the next one and have the IB trades in my chamber there to be able to trade my playbook, however you want to use it, sports analogy, hunting analogy, whatever. That's the theory. And only trade those setups which have been thoroughly vetted to have and identified and proven to have, statistically and mathematically proven to have a positive expectancy. That's my story, and I'm sticking to it. By golly. Let's see now. POC is here at close, which is 55.11. What's the next probability? Well, we could pull it up here to 67 pretty quick. Just need about 600 contracts. Here we go. About 600 contracts here, and that POC is going to shift there. What's the next? Oh, if we run it way up here, we could bring it back to price check at aisle 3. Who knows what could happen there. We're out of I think we have a couple talking feds here going on, but I don't see any critical risk on the horizon. That's the scary part is, is somebody going to drop something on Truth Social or whatever you call them. What do we call that stuff? I don't know. I heard a pretty amazing thing, Richard, which is true. The Trump administration or the current administration have decided that they're going to review 50. I maybe shouldn't say this because I'm not. It sounds ridiculous when I try to say it. 50 million issued visas. They're going to review that they were all issued in accordance with the new with the new administration requirements and guidelines. I don't know what so people did everything right and suddenly they're going to get the rug jerked out from under them because of something else. That's like, talk about changing the goalposts in the middle of the game. That's pretty crazy. And second of all, given the new administration rules, the following people's visas should be revoked and they should be not allowed in. Are you ready? Laura Loomer, whose mother was not a citizen and here illegally. Marco Rubio, whose parents were Marialistas and got, citizenship by birthright, which is the big thing that Trump's trying to get rid of. Melania Trump, who came here on a student visa, overstayed, worked illegally. And last but not least, Donald Trump himself, whose grandfather was deported from Germany as a felon to America, and I believe committed, according to what I saw, committed other crimes. It should have been pushed back out of the country again. Would have been pushed out of the country again. Talk about, it's the old thing of climb the ladder and then burn the ladder. The loudest voices. That's the case a lot of times, though. You'll find that people that make the most noise about something are the people that frequently do that something the most. That's something I've noticed in life. I was pretty surprised by that. Now, I didn't fact check any of that, but it, makes perfect sense. I know the story about Rubio from Miami and his parent, that family came Marialistas. And in those days, when I was in Miami, which would have been the late 70s, early 80s, when the Mariel boat lift was going on, which was when Castro emptied out the prisons and took everybody down to the coast and put them in boats and sent them across to America. All the criminals. And other people as well, but all of the criminals out of prison. That was called the Mariel boat lift. And they called those people in Miami the Marialistas because they're the people that came across in the boat lift. And all the Cuban community in Miami heroically got together and got all their boats and would go out. It's only 90 miles from Cuba to Florida, to Key West, basically. And they went out in their boats to, because these boats that Castro was shoving them off in were old rowboats and floating dinghies and stuff like that. And they were trying to save as many people as they could. Good for them. But during those periods of time, the immigration rule was wet foot, dry foot. If anybody could get 1 foot on dry land, they were welcome to the country. Now, apparently, people that came here played by all the rules and got a visa and came here and did all of that stuff, I guess that's not valid or could be overturned according to this new idea. Craziest thing I ever heard. Strange times we live in. Very strange times. And here's a stranger time. We keep dancing over this POC that's migrated up a tick now. And we still haven't taken out the IB, right? This mouse is getting ready to die, I'm afraid. I have to keep switching it off and on. Fortunately, I have a couple. I would suppose that pretty quick after this profile gets pretty built out, they'll just zoom it down and take out the IB statistic. The test lower. That'd be my guess. But once again, I would certainly not be trading towards that statistic. We're now 10:15, almost an hour in, and nothing's happened. And any one of these locations that you thought that was going to be a good idea, that as a trader, I would have thought that a good idea to trade to the stat, I got stopped out every one of them. And as soon as I say that, they're going to run it down and take the IB statistic now, probably. Maybe. All good reasons not to be. There we go. Now we're going to get there. Maybe. And maybe not. Look at this. And look at this. I'm not saying they're the same, but you know. Rod and company have a V reversal idea. That would have been a classic up here. Down here, kinda. Except for the fact that we have this, the POC and a bunch of stuff. We have both POCs, down low, settlement, and that stat right below us. Oh, here's speaking of stats, the overnight low, I didn't get that one switched. 49.6. What's going on here? Well, let's put the 4 in there. Shall we do that? Okay. Trying to just get some of these I had missed because we opened right on the cusp of higher out or higher in range. Oh my goodness. There you go. 65, 58. Pretty substantial. Oops. Trade what you see, not what you think. Wise words. And if you look at this in a smaller fractal, I guess, this could be what those would consider a bar trade, which is a breakout and retest. That's one I haven't figured out the parameters of. It's kind of like the VPOC migration. It's so simple. How can anybody not see this yellow brick road? Okay, well, sure. But now let's cut to the chase. What are the qualifying parameters that can be identified for the to qualify an entry on that movement and a trigger, and then you need to backtest it. If you took the short right here immediately, you got salt pounded in your ass as fast as you could say don't. If you wait for the pullback up here and back down and test again, you got hammered again. Like I said early on, before the IB statistic was set, and we have yes, that was really good too. I saw that too, Richard. Absolutely correct. And Mr. I'm a big Scotsman guy. Yeah, that was really good. That fellow is a sharp. Friedrich is a sharp guy, absolutely. One thing about it with this current outfit we've got, it's not hard to get a leg up on them, you know. I saw something about Bissett, the Secretary of the Treasury. He had a hedge fund prior to getting this appointment and lost his investors billions of dollars. Now, early on, apparently 15 years ago, he had either the same hedge fund or a different one, and it was successful for a few years, but he had a pretty dismal track record just before being made head of the Treasury. And the Mirren guy, this new Fed governor, who still remains an employee at the White House, I thought it was two things. I thought it was pretty funny. He was confirmed last Tuesday, I believe. Not this week, but week before. And has had about 6 or 7 speeches since then. Google Mar-a-Lago Accord, and he wrote that. It's a real spooky financial idea to like tip over the government and take over the plant industry and whatever else, apparently. And he's the guy that wrote that, I guess, Stephen Moran. I don't know. I haven't read it other than points of it, so I don't want to speak too much. But yeah, I did really think that was great of the Prime Minister of Germany. Yeah. And I didn't see the interchange, but did he say that, by the way, your grandfather was deported because he was a criminal? That would have been pretty funny. And this is all just what I've heard and read. How the hell would I know? Same story with the Laura Loomer, and I know Melania Trump is that's been around and a fact for a long time, and she was hooked up and a girlfriend of Jeffrey Epstein too, by the way. She was working for that quote unquote modeling agency. And Rubio, I know because of the Mary Elista thing, but I don't know I never heard of Laura Loomer before. I don't know where she even dropped out of the sky. How some goofy chick like that can have some kind of importance with the President of the United States in the Oval Office and whatever. I don't get it. I think it's like the Charlie Kirk thing. If you're allowed have a certain following of what do you call them, influencer, and you push the same narrative that the administration follows, then that elevates you to that, into the good standing there, like the Charlie Kirk fella that was just shot. Terrible thing. Doesn't mean he was a great guy. It's a terrible thing that he was shot. One doesn't equate to the other. Richard Dawkins said, "Don't canonize the devil." Now, he was pretty flamboyant in the things he said, but, the fact that the guy was assassinated is terrible and a very definitely bad thing, but it doesn't mean the guy was a great guy. He said some pretty crazy stuff that I've heard, That black fella that was killed by the cop, was suffocated by the policeman, George Floyd or whatever he is. Apparently Kirk's comment was, well, he got what he deserved. And, women shouldn't be allowed to take birth control and some really random crazy shit. I never listened to the guy at all because he struck me as a right-wing kind of a fascist-y kind of person, so I just didn't bother ever listening to him. But it is really a shame and obviously a bad thing that he was shot. If for no other reason, it sort of makes them a martyr, and that's exactly what they're trying to do. This big event, to the memorial service and all that stuff, it martyrs them. So that's not good either. Well, we still haven't taken the IB stat. We're almost at an hour. I'll bet you that there's a whole bunch of boys and girls that trying to trade to that stat that are disappointed, and then there's a bunch that are trying to pick the bottom. What are they going to do? They've been scaled, I guess. It's kind of an important thing to think about. Asymmetrical. In reality, we're at a situation where you need to be considering, if you're not trading a statistic that you vetted, which I am attempting to do, you need to be careful about asymmetric trade location and your risk-reward ratio. They go hand in hand, and they're probably the two most important things that there are going out there. If you get long right here, or short, either one actually, but if you go long right here, where's your stop? It's right in the middle of all this traffic on the POC, which by definition, let's all say it together, is the most traded price, the price at which the most volume has been executed so far in the session. What's the likelihood that price will go back there? Pretty likely. If you get long from down here, okay, I don't think that that's the right thing to do because I don't have any statistics about that, but if it goes a tick below you, you're pretty goddamn sure you're wrong. And you do have the possibility of some reward. So it's an asymmetric relationship between risk and reward. The next thing that's important to understand is that the most hocus-pocus, bogus statistic for clickbait that is in existence on the internet to do with trading right now that, as far as I'm concerned, is a win rate stuff. Anytime you see somebody with, oh, I've got a 90% win rate, blah, 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 just laugh and immediately move away. I can have a 99.9% win rate and go broke in 5 trades. It's risk to reward ratio that matters. Now, win rate can be used in conjunction with average win rate or average winners and average losers to calculate your expectancy. And that's a very valid number and very important. But these internet rearview mirror guru douche canoes that go on and on about win rate, just ridiculous. Stop and think about it. If you have a 1 to 10 risk to reward ratio, no, other way around, I'm sorry, 10 to 1 risk to reward ratio, you're risking 10 points to make 1. So every time you take 1 stop, you've got to make 11 winning trades to make up for that 1 stop. Or the other way around. But however you want to look at it. But the win rate is meaningless. You can have, you can win 1 and you lose 10. So that's 100% win rate. That's why the win rate is so useless. It's nothing but clickbait. Remember, this is my opinion. If you feel otherwise, I'd love to hear about it. I mean, and prove me wrong. I don't mean prove me wrong as confrontationally. I mean, I would love, genuinely, sincerely, I don't mind being proven wrong at all, because what's important to me is to have a good and accurate understanding of something. And if my understanding is flawed, then I'm all for finding out about it. So, there's that. And now, well, there's no news on the horizon, which is a little scary, except that it is 11:30 on a Friday in the East Coast, so perhaps the golf carts are all speeding out onto the links. Yeah. It would be pretty cool. I will stay focused on the day because, as I said earlier, okay, our statistics are in this open type that 98% probability that the IB high or low will be exceeded by price at some point in the balance of the RTH trading session, somewhere between 9:30 and 1600 Central Standard Time. I do not, what does that mean? Well, the other side of that coin is that it's a 2% probability that neither one of them will be taken out or exceeded. I don't remember seeing that ever. I'm sure it's happened. I don't remember it. So that'd be cool. I'd like to see that. Just for grins, man. Or for Austin, quote Austin Powers for shits and giggles, or whatever he says. Yeah. So what? Let's see now. Take a quick zoom around the horn. Here we are at 10:30, so we're an hour in. We have not taken the IB statistic. Anybody that's tried to trade to it has been thoroughly stopped out a time or two. Hopefully, if you tried to trade to that statistic, you got positioned up in here somewhere where you got a scale, because then you're at least risk neutral. And what are we doing now? Well, if you see this profile, what is happening here? We're building this lower distribution out. We're rotating back and forth across this lower distribution a lot. We've got a zipper going on here. Or the kids are all calling this a barcode now. I guess I got to get up with the times. We're barcoding. I like the FT71's analysis or analogy of a zipper. Anyway, we're rotating around this lower distribution. The more so we do that, it'll start having the resemblance, and you'll see it more perhaps over here in the market profile, of a B-shaped, B like Bravo-shaped profile. And what that generally indicates is long liquidation, which is a little bit funny. I have to think about it a minute. Well, the P-shaped, which is here from yesterday, that's short covering. B is long liquidation, so make up your mind. I'm not sure whether any of that means those things. It makes sense that that's how the trade would build. These longs are getting spooked, so they're liquidating. We got a doji yesterday, and I think that's a doji. What does this mean? That means open. We either traded up or we traded down first. Who knows? With the candlestick, you don't know which happened first, and there's our close. Absolute indecision. A little bit longer selling tail. Then buying tail. I think that's how those go. And again, we're looking at kind of so far an indecision doji. And they're all just kind of trading right around this previous micro composite VPOC. What does any of that mean? Well, one thing that I'm sure of is the market. Let's just look at this on a bigger scale here. Come on. Well, let's look back a ways. Man, you gotta get this scrunched down to get Revolution Day or whatever the hell they called it, Independence Day or whatever it was. So what happens? Well, the market goes up to go down, goes up to go down, goes down to go up to go down, down to go up to go down, down to go up, down to go up. This is irrational behavior up here, I think. All-time highs, high, 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 high. So this is Independence Day. This is Tariff Day. This is the non-farm payroll debacle. Non-farm payroll story. Let's fire the guy. Oh, wait. The worst numbers with the new guy. The Fed rate decision. Does anybody know why we're way up here? I don't know. Well, stop and think about this for a second. Stop and think about the fact that we are in a zero, that futures trading business is a zero-sum game or environment or business. And what does that mean? For every buyer, there is a seller, and for every seller, there is a buyer. By the nature of the instrument, it is a contract between one buyer and one seller. Period. Couple things are true because of that. It's absolutely impossible to have more buyers than sellers. If you hear somebody say, "Oh, well, why'd we go down so fast? Oh, there's more sellers than buyers." No. Just, again, that's another instance to laugh and walk away. No, that's not the case. It's impossible. The way the market goes down is aggression. Sellers are more aggressive than buyers. Sellers cross the inside bid and the inside market and hit the bid. And they keep doing that, and down we go. Market goes up, other way around. Aggressive buyers cross the market, lift the ask. At no point in time is it physically possible to have more buyers than sellers in the futures market. Stocks, you bet. Futures, impossible. So what's the next thing you can think about that? Well, every time the market goes up, somebody's on the other side of that coin. All these guys that are buying, somebody is selling. Is it someone taking profit from along over here? Well, they probably got shaken out here, huh? All these buyers up here, someone was on the other side of all of that. How will that someone, whoever that may be, take profit? The market goes up to go down. I really believe it's pretty much that simple. And I know that the facts that I just said are correct. That, in fact, the market is definitely a zero-sum game. It doesn't mean it's a bad market. The futures market is by far the best market to trade, in my opinion, because it's the most fair, transparent, good leverage, great tax advantage. So there you are. But the market goes up to go down and goes down to go up in any fractal in any time frame. And then you have to factor in the truth that it is a random environment, and that the outcome of the very next trade is 50-50. It is a binary event. It's like flipping a coin. If you don't think so, go read something else. I mean, go read a statistics book or any. And these are not truisms that I dreamed up. These are realizations and stated facts from the most successful traders and statisticians in the world. Hedge fund people, Ed Thorpe, Jim Simons, Paul Tudor Jones, Ray Dalio, Tom Sosnoff, Tom the Trader, Tom B, on and on and on. Rod, whoever you want to listen to. It's a fact, Jack. So, what's the next? What should I do as a trader? Well, I want to approach trading as a business, a consistently profitable business. And I do that by realizing that the market is random and that the outcome of the next trade is 50-50. And so I want to approach it from a probabilities perspective, because that's the only way you can approach a market or an environment like that. And that's what I'm doing now. You identify a situation or a pattern that repeats, seems to, with specific criteria. And then away from the market, ideally, away from the live market with backtesting software or whatever else during your homework period, you capture a statistically significant sample data set of that setup and that criteria. And that sampled statistically significant data set means it's outside the likelihood of random distribution. Random distribution is a coin flip. Perfect example. Everybody knows a coin is 50-50. If you flip a coin 10 times, nobody's surprised to get a majority of heads or tails, one or the other. Flip a coin 1,000 times, pretty close to 50-50. That is a statistically significant data set outside the likelihood of random distribution, because it's very, very likely within a random distribution that you'll have a string of one or the other. So you capture this data set of your setup and your criteria, and you try to make it large enough data set. That's why backtesting is so much more important than trying to do it live. I mean, if you want to copy 1,000 or say 100 or 500 or 1,000 trades in your data set, and you want to do it in the live market, you're going to be older than Methuselah before it's over with, or you're going to be not following your rules, because in order to backtest or identify that statistic properly, these parameters have to be the same. Same entry rules, same trigger, same stop, same T1, same T2. They can't change. Otherwise, that trade is not part of your statistical data set. And once you've captured that, you determine if it has a positive edge or not, or expectancy. And if it does, you rely on the law of large numbers to manifest or to compound that expectancy to your bank account. Here we go. We moved her up. Boom. Where do we move it up to? Oh, what a miracle. Right back where it was before. You rely on that law of large numbers to compound the percentage of expectancy to your bank account. That is the methodology of all of those most successful hedge funds and traders in the world. And if you probably figured it out, is the business model of a casino, or the gaming business from the point of view of a casino. So they play no game, which is not, they have not pre-identified to have a statistically proven edge or expectancy with very specific rules. Then on the casino floor, when they roll that game out, their only mission in life is to play the game as many times as they can in 24 hours. They know there'll be winners. They know there'll be losers. They don't freak out. They don't change the rules. They look at the large data set. Is this within our pre-established data? And if so, they just keep going. And I don't think it should be a big secret to anybody that casinos, except for I only know of one casino that has gone bankrupt, and that was the Trump Taj Mahal in Atlantic City. But by and large, they are literally a gold mine, a golden goose, I think. So that's the way I'm trying to approach the market, and the statistics that the statistic trades that I'm working on are the IB continuation and the IB failure. And we have not taken the IB statistic yet. So there is no trade to take. There you go. That's it in a nutshell, boys and girls. Oh, my eyes. Do I imagine that the IB statistic will be taken out at some point today? Yeah. Because there is a 2% probability in this open type that it will not be taken out. There is a 98% probability that the IB low or the IB high will be exceeded by price at some point in this RTH trading session. That is a statistic. That is a probability. Looking back over a sample data, over a data set of 2,000 days, 2,000 trading days. There you go. Yeah, that's the boring, I guess, truth of the real truth of trading. And I'll be the first to admit that these internet guru guys like Matt and those guys that are, are Rip and all these great names are, they're clicking and banging and yelling and screaming and kinds of stuff, and likely just completely bullshitting, but it's a lot more interesting, that's for sure. And there's a lot of guys that, again, I know it's, repetitive, but this is not my way or the highway place. This is my virtual trading journal, and I'm talking to myself most of the time. Except now and then to Richard or whoever's passing through. If you are consistently profitable, turning your head away and clicking the mouse every 15 seconds, keep doing that. But I need to have a little more structure. And I believe statistics on my side because of all the things I've already said, in this, especially in this environment, limit the risk, how frequently and how much you put your account at risk. I am trying to only do that where I have a high statistically verified edge, maybe not high, but at least a verified edge or expectancy. And that's the way I'm approaching it. And there's a lot of people that do it some other way, and good for them. I wish I knew that secret, I guess. Maybe I'm pissing in the wind, you never know. I take solace in that the best traders and hedge fund people in the world prescribe to this same theory. And, right down, as I said, from them down to the ground level here with boots on the ground, Rod and RM and, Harry and Tom B and guys like that. Tom, the trader, that best loser wins guy and all that. It's statistics and probabilities. He's a little more loose. I don't listen to him much, and I get all of the stuff that he sends out on the mesh text and things like that. But listening to him, first he seems like a great guy and whatever else, but I don't pick up necessarily all of his stuff is statistically driven as much, but I'm sure that's because I'm not familiar enough with his process. Very clearly, the Ed Thorpe, Jim Simons, Paul, current active people, Tom Sosnoff, and the whole Tasty thing. They openly talk about we are a business of probabilities, and Tudor Jones, I believe so. Tom for sure. Rod. And these are guys that are, colleagues, trading people that we know and interact with in these different chat rooms or Discord rooms. Phenomenally encouraging results, $30,000, $40,000, $50,000 a month. Trading these setups and these rules with this methodology and this thinking. Definitely inspirational. I would. I'd like a couple of kisses too, maybe. Ooh, food. Kisses with potential. You never know. I'm going to see what's going on now. Damn near 11. I'm going to step away. So, Richard, get your trading gear on. I'm going to be away from the screens here. I'll bet you we get that low. Let's see what happens. Oh, well, I'm disappointed in you. I thought you boys would take advantage of me being gone and wipe the world with it. It's a good time to point out some psychological things that can happen. Somewhere I have, yes, your monkey mind. Whether you're a creationist or an evolutionist, I think everybody agrees humans have been evolving, or I guess the evolution or creation wouldn't like that, but we've been around a long time, developing. There you go. As a species, and therefore, all these things that we think are so pertinent to trading, blah blah blah, FOMO, wanting to win, our ability to see patterns, whether they exist or not, all that stuff, or our tendency to see patterns if they exist or not. That's all baked into our DNA, man. That's all our wiring from, And if you think about it, it's how we evolved, whether you like that word or not, as a species. If our ancestors didn't have a behavior that protected their life, then they died and their genes didn't get passed on. That's selective adaptation. That's how it works. That's how cattle are bred for beef. That's how horses are bred to run. It's got nothing to do with what you believe on a religious level or not. It's got to do with reality and science, So FOMO, wanting to be right, believing that we see patterns whether we do or not, all those things, you're never going to get rid of any of that stuff. What I believe you need to do and what I strive to do every day, and the reason I'm talking about it now is this is a classic example. You need to be aware of those emotions, FOMO being one of the big ones, or revenge trade. You know what I mean? You take a stop, you miss a trade. God damn, you click, click, click. You got to be aware of that and then not act on it. If you can't do it instantly as your day, progresses and as you think, then push the mouse away until that part's gone. Tom B refers to it as Hyde, which is kind of cute, Jekyll and Hyde. Alter ego, that devil on your shoulder in the cartoons, however you want to visualize it, it's a fact and you need to be aware of it, and you need to be more aware of the fact you're never going to eliminate it. These guys that go out, I'm going to eliminate FOMO. No, you're not. You're going to feel FOMO every freaking time that scenario sets up. But what you need to do is not act on it. You need to be an adult. So right now, we have not taken either one of the IB trades or the IB statistic, which means there's no possibility for me to be looking at an IB trade. As the day progresses, you want to have that happen. You want to take a trade. Well, I want to take a trade. I want that IB to be, I don't know what I would do at this point. If we take the IB low, I'm nearing a point in my thinking where this is turning into a rotational or B-shaped profile, and if we take this IB low, there's a high probability we'll rotate back up to the middle, as opposed to continuation. But I would like to see that happen on one hand. On the other hand, as I said earlier, I'd love to see him not taking either one of the IBs, and I think that would be the first time I've ever seen that I can remember, that I would remember. Anyway. So Your monkey mind. Really important thing to keep aware of. Always be alert to. Look at these crazy islands here. All these little humps and jumps and bumps, and you see all it took was a couple of contracts, right? Boop, 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 and that's what it did. I'll throw this in here just for grins. A really good reason why I keep the entire session in view, and I try to keep a perspective on my scale. Likely possibility, this is just a, here I go. I'll make a prediction here. They'll take this IB, one of the IB stats, more than likely the IB low, somewhere in the 12 to 1 area, period. We're now in RTH 2, which is simply a division that I think Rod cooked up, which is a great idea. Just take the total number of minutes in the RTH session, divide them by 3, and there you get RTH 1, 2, and 3. Just a way to kind of group your trades. Am I more successful with any or all of my trades in RTH 1 or 2 or 3 or whatever? A continual effort to try and filter and focus, or filter out noise and focus on something that matters. See if I can. I'm going to check something out here on the music side of life. I've had a weird, it doesn't matter. Nobody cares but me. What any of this shit means? No idea. Well, there's no news on the horizon. Well, I don't see anything over here, and that's a little scary, but on the other hand, good. No news is good news. Look at us go. Aren't we having fun over here? What's going on, and what do we guess about? I'm guessing volume's up. Oh, just a little bit. 115% at this time of day, and our ATR is coming down from a high of 10, almost 11, 10.74, down to 6.5, 675. This is average true range in a minute. Here's our statistics boy again. I encourage you, if if any of these things are important to you, or if you want me to put up just single posts of them so that you can screen snap them and keep them if you don't have them yourself, please do. This looks back again at 2,000 days. These are the 4 open types. Now, if you take a screen snap of this, it's going to be pretty damn accurate for a while. They don't change that much looking back at a large data set. So if you don't have IRT, you'd like to be able to look at those statistics on your own for some reason. Okie dokie. And here we are slopping back and forth. That's just great. Building that big B, baby. The B for baby. Yeah. Come here, baby. Come on. Come to daddy. I guess all those kind of jokes those aren't very funny in this Jeffrey Epstein. Drop something in the chat. Richard and I getting lonesome. Say thumbs up, subscribe, send money, pick one. We'll make a poll. Okay. It is Friday. It's 28C right here and sunny. Not getting any major air quality disasters, so that's pretty cool. Air quality is terrible here a lot, and it surprises the hell out of me because it's flat as a board and there's no hills. I think the highest mountain in this part of the country is a flyover on the freeway. And it certainly is visibly from the top of that flyover. You cannot see any point on the horizon, so 50 miles in any direction, I guess, would be the horizon here. It's funny that the air gets terrible here. I guess you'd think that being close to the Gulf, there'd be some sort of normal, exchange of air and wind, keep it cleared out. Typically, I associate air quality with, a basin like Kuala Lumpur was surrounded by mountains. Sometimes you'd get an inversion, the world famous inversion drama in LA between the Santa Ana Mountains over there. Those kind of things. I never thought about it on a pancake. Well, don't ask me. This is not any trade I'm betting, and nor will I be thinking about taking one. So this is just basic whistling Dixie here. We could look at I could run through the back testing. That might be something to do. The rules there and how that works. That's pretty cool and pretty important, and where I'm going with this whole thing. One thing I could do with regard to that the back testing and yesterday's trade. Not sure whether you guys can see this very well or not, but we'll see. This is a screen snap of the trade yesterday. I don't know why the hell that's not. Why isn't it here? Oop, 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 go away. Yesterday's trade and the outcome and the whole session. Now the time is off because of this statistics bar which I capture, giving the entire breakdown of the trade in terms of, to the second, and it ties together completely with my parameters up here that I talk about in the pre-market. And you see how Bookmap so clearly identifies entry, break-even line, stop, target, the other targets up above us. I don't know whether I've got that one here. Oh, that's pretty dumb. Well, here is a view before the stop, just after the trade was on. You'll see that there's 2 lots in. There's the average price. We've got sell orders in for 4 lots. And so far, the P&L was 2 points as of this snap right here. Now, there's the entry, there's the stop, there's a TP1, which is the scale, and here's the second profit target at 48 ticks or 12 points. Now, let's run through this a little bit. Okay, there's the context. There's the statistic. Pulled up, pulled back, came up here. That pretty much was my previous rules for my IV continuation. Long. This green line is the break even. Once you get to scale, this green line jumps down here. Okay, so that's over with. Now, just looking at this now in hindsight, clear mind, monkey boy is out playing with bananas. This is sort of symptomatic of any kind of an IB continuation trade, and that is that you're, by definition, it's pretty much the high of the day, right? So it is essentially a breakout or a continuation in the direction of a breakout. Ask yourself, I need to ask myself, what is the likelihood? Obviously, getting the scale is great, but it is by no means the target or the goal. This is the goal. This is where you make your money. That's quite a reach over the previous low, the overnight mid. So it's within reach that we could get up to this target. It's reasonable, I think, to assume that. Now let's look at this one. And I'll try to be clear with my explanation here. First of all, let's look at what's happening. Well, here we go. 11:30, we've come across the mid. Here's where I said I have no clue what to think. What are we doing now? Well, what's going to happen next? There's 42. Where are we? We're at 10,832s. So we need another 6,000 contracts in here to get this VPOC to migrate back up. 10,800, 4,000, say 4,800. So say 2,000 contract or 6,000 contractors. So that might take a while. We are above the mid, meaning we're now, what's the mid? Okay, it's the middle, isn't it? We're closer to the IB high than we are to the IB low at this point. So that's interesting. Let's get back to the business at hand over here. Now, this is a zoomed in version and you don't see the take profit target up here at the top. Sorry about that. But you did right there. It's up there at about 84.5-ish or something like that. So it's just above us a couple here. So look at this now. This is in the trade. That's the stop. Minus 24 ticks. Stop didn't move, of course. We're going to do that. We'll never move T1. But let's think about this. The new backtesting rules that I've been testing state the following. The first rule is the IB is taken, right here. I know something we could do, maybe more fun, more interesting. This is the backtesting area. Now I've set this up with all of these lines here are just custom indicators that mean absolutely nothing other than a visual cue for me to visually understand if these signals are working as they're expected to. And similarly, that's what I've done here is code the different signals. A is the first one, that's the IB signal. B is the pullback. T is a trigger. Obviously, these signals are not sequential. There's T is before B, that can't matter. But right here, there's A, there's B, there's C. That would be a valid trade. But let's look at, and this is yesterday, right? Yeah. So let's go over here. A little more. Now my IB continuation trade is as follows. The code for that would be, hold on. The code for that is A. We take out the IB. This green line is the IB. Yep. These are the continuation zone. And this is 1 point either side of the IB, which is the pullback zone trigger. So if for this to be a valid IB continuation trade with these rules, there's the IB. I needed to have B established in this pullback zone, or this continuation zone, and then the trigger to be in this trigger zone. Doesn't happen. Now, had I been switched on and thinking in terms of these rules, what did happen? Well, here is the IB failure. There's the IB. Here's the pullback zone, B. Here's the trigger, T, short. Boom. Fantastic trade. All designated and validated by the rules. What happened over here? Here's exactly it. There's our statistic. Now, the continuation zone by definition is 3 points to 5 points. Well, we know by the two-lot trigger or two-lot trade package that I use that the first risk-neutral scale is 3 points. And conveniently, the stop is at 3 points below the IB, or the entry. Okay? The entry in this case happens to be right on the IB. Here's our IB statistic. Price never got above 3 points into that continuation zone. Yet I went long for an IB continuation trade, not thinking of the correct rules. What did happen? Well, there's the IB. We pulled below 3 points, i.e. into the pullback zone. We trade up to within 1 point either side of the IB, in this case right to the IB, would have triggered a short. Down we go. That was the trade. That's how trading with the rules and backtesting can work for you. Is going to work for me. Works for me, I should say. And now what are we doing? Oh, we got an M. Oh boy. M for Mary. Let's see if it's on the palm of my hand. Yes, okay. It's going to be $1 million deal. What did we do? We traded right up here to these previous price check at aisle, whatever the hell they are. Didn't get any higher. We're above mid. Didn't get any more ground. And now we're pulling back. And like I said, get out my Ouija board here and my hat with the stars on it. I think we'll probably take the IB out. And I won't say which one. My guess would be the lower IB between 12 and 1. That's just complete flip a coin, throw a dart, BS and bus tickets, baby. Right there. So now you know the world famous vetting process, backtesting process, and I'm real encouraged by that. No, I hope I wasn't on mute the whole time. Nah, that sucks. If I was on mute that whole explanation of the back test, I am sorry. I'm terrible about glancing over at the damn mixer. If that last bit of conversation around the back testing was muted, somebody dropped something in the chat. Otherwise I won't. I'll go over it again, but otherwise I won't. I wonder if I can do that myself. Oh, I can. I'm going to try this myself. What a dillweed. Yeah. Very definitely on mute. Well, that sucks. Well, goddamn. They're gonna monkey around here. Pick out the IB high. You watch and see. All right, I realize that entire description and analysis of the back test was muted. Stupid. Okay, so meanwhile, back at the ranch. Boy, I hope the rest of that. I'm going to have to listen to this stream and see if I got the difference of those rules. Anyway, backtesting. The way this backtest works is, I look at 500 days. He has 2 lots, RTH session reports, okay? This will backtest my IB continuation. These are the rules. The rules are charted over here, well, these are signals based on the rules. Now, this is for IB failure, not IB continuation, so never mind. There's the back test. And quickly what happens is we just back test 493 days in 4 seconds. We analyzed 263 trades. We took 263 trades. 128 long, 135 short. That would have netted $40,325. This is the daily consolidated report. Maximum winner, maximum loss. This should never be more than $300 because that's our stop. This can change a little bit with slippage or end of the day. Should be 750 bucks. That's a total of 60 ticks for 2 contracts. There are 263 trades, 89 were winners, 86 were losers. That's 160, that's 175 total trades. The difference between 175 and 263 are scratches. We have a positive expectancy of 2.12 and a percent profitability or win rate of 33%. Now the real thing is you can, if you want to be, and you should go to this extent to actually, wrong one. Sorry about that. You should go to this extent. You can analyze each and every trade that was taken by the system. October 31st, happy Halloween on 2023. At 11:45, it went long. And look at this, isn't this pretty funny? The ES is trading at 46.67. We just traded 66.87. 66.87. So 220 points higher than right here. My golly, we're going to go up and take that IB high, sure as a shit. Anyway, we took a 2-lot long. We took our take profit target 1 or take profit target 2. 750 bucks. Here's a second long on November 3rd at 1 o'clock. Took a full stop. And November 3rd at 1400, we took a scratch. And so on it goes for 263 trades. That's how I think you should do it. That's, in my opinion, the correct way to backtest and come up with a statistic that is accurate. Now, this is today's trade. Right. There's today's trading so far. We don't have any signals. Why is that? Oh, that's right. We haven't taken an IB higher and IB low. We've already talked about that. So that's how I'm doing it. And now that I didn't have it on mute again, for the record, there you go. Yeah, take care, Richard. Have a good one. Look at us go. Aren't they little Energizer bunnies over here? Man, and all these poor suckers that are looking for the IB low are hammered. The guys that are trying to call the bottom are walking around beating their chests. And, you know, that's it. That's how it works. Remember, there's no ever the possibility of more buyers than sellers, and this is a zero-sum game. For every buyer, there's a seller. In this case, for every seller, there's a buyer. I do not know how to determine profit taking, or like limit orders, resting limit orders, or initiating. There's got to be a way to do that. I just need to think about it. For example, all of these guys are buying, right? I mean, somebody's selling to them. Well, these guys are short, way short up here. How do they take money? How do they make money? They bring the price down. They get aggressive and come across the inside market, start hitting the bids. So this guy who went long here is stopped out here or taken profit. Likely stopped out. This guy who went long here, stopped out. And down we go. These guys that got long down here, at some point are going to be stopped out, and the guys that are selling to them are going to need a way to make money or to adjust their inventory. It's a zero-sum game, remember that. Well, you see what I said? Oh, man. Are we gonna take the IB high? If you want to look at probabilities, I would say yes, because we are proportionally or substantially higher, or let's rephrase it, we're substantially closer to the IB high now than the IB low. And if you think of that for a minute or more, you realize that that doesn't mean anything. Look at here. Boom, 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 boom. And no IB low. And all of them from here, all of them from right here, right there, the IB statistic is in play from right there. Boom. And you can rewind my to the conversation here around 9:30, about 30 minutes, or wait, about 55 minutes in, and you will hear me say, do not trade to the statistic. And this is exactly a shining example of why I say that. And it's not because I'm a clairvoyant, remote viewing Gandalf. That's because I have tried trading the statistic enough times and realized that's a really dumb idea. You know, getting stopped or whatever. So, you know, it's like a lot of learning the hard way here. Well, that's about as close as you can get to price check at aisle 3, isn't it? On the big aisle, as Tom calls it, or somebody does. Look at there. My, huh? I'm not talking about this stuff to try to be a big shot, and obviously there's nothing in it for me. But if anybody's listening, and for my subconscious to be listening, learn from my mistakes. My prediction was we would take the IB statistic from during the 12-to-1 period, and it would likely be the high. And with that and a quarter, you can make a phone call. And apart from the hours of the day, I have a 50-50 probability that I'm going to be right. So, I reckon the volume's still pretty high. Over 100, I'm saying. 118. The ATR continues to come down, which is pretty much normal, or to be expected, I would think. That doesn't look very good there. Kind of came to a grinding halt right here, didn't it? Or is it just me? I think they're maybe hanging on this Bowman. Fed Governor Bowman is speaking, saying a few things that probably make sense, which will saying some stuff here that probably makes sense. So here we are. What is this here? This is 12:07 on Friday, the 26th of September. We are still stuck in the middle, have not taken either one of the IB statistics. In this open configuration, the probability of taking one or the other is 98%. Remember that is the price will exceed the IB high or low at some point in the balance of the RTH trading session. So in other words, at some point between 0930 and 1600, price has a 98% probability to go here or here. What does that say on the converse? It says that there is a 2% probability that we won't take out either one. That's pretty low. Personally, I hope we don't take out either one. I don't think I've ever seen that. And I certainly know that, well, I'm pretty damn sure that I've never had that on the stream, so that would be cool. A neutral day, if I'm not wrong, is when we take both. The probability that's usually around 32%. I don't know. Off the top of my head in this open type, let's look. Both IB high and low, 82.4. Who's that masked man? Okay. So there you go. We used to have those frequently. Yesterday, actually, we had one. But not taking one or the other? Pretty suspicious. And if I was going to be a good boy here, and I'm fighting off a breakfast food coma and it's noon, so, you know, it's also my wife's birthday and our anniversary, so there's a lot of complicating factors here, but let's, if I was going to be a good boy, I'd be on my little toes here waiting for an IB statistic because I'm trying to vet either the IB continuation or the IB failure. And in this configuration, I have nothing to say. I don't know. Typically, well, let's think about this now. The IB continuation trade is suggested when we have a directional market. The IB failure, common sense, is suggested when we have a balanced or rotational market, because the IB failure is just a fancy wording using the IB statistic as a mean reversion trade outside in. And in this case, it would be one hell of an in because the POC's clear down here at 70. That's 30, damn near 30 handles, right? 34, 33 handles. What does the market look like? Two big distributions. Was kind of a prominent V-shaped. Now it looks like it's turning into a gal with lopsided boobs over here. I have no clue what I would be thinking about. I don't know what I would be thinking. If we do, as I suspect, and there we are taking out that price check at aisle 3. There's a price check on the big aisle, baby. Assuming we take out the IB statistic, what do I think will happen then? God damn, I don't know. I would kind of think about well, I'll tell you what I know. Wait a minute. Okay. I will follow my rules specifically. Unlike yesterday. So there, Bubba Louie. So what do you think of that? Well, I still hold with my prediction that we're going to take out an IB. Between 12 and 1. And let me just give you a sneak peek into that. There is a statistic called the 12 to 1 statistic. Wow. Not very creative, I'll admit, but it is. And we've had, I think, 2 or 3 of those in a row this week. It's real simple. It's essentially like the IB statistic, only a different initial setup. And it says that if the market is out of balance, which it sort of was, and now it's kind of coming back into balance, so that throws this off a bit. But the 12 to 1 stat says that if we're out of balance, the market's out of balance, and we put in a new high or low during 12 to 1, there's a 90 plus something probability that will exceed that high or low in the balance of the RTH trading session. Just like the IB stat, only it's between 12 and 1, and the requirement is that the market needs to be out of balance. One of the problems, or not problems, but one of the things to do with Bookmap, it kind of looks out of balance here. It kind of looks more directional, right? But in reality, these are two pretty well balanced distributions with excess on the top and excess on the bottom. maybe a little more plain to see with the greater different perspective on the volume profile. Notice that we have very little excess at the bottom outside of the value area, much more so above. Not sure what that means. Disregard this expected move stuff. These are something I'm just testing out. Somebody talked about them, and I'm based on the implied volatility expected move for the SPX, which is the underlying for basically for the ES. This is a daily and this is a weekly. It essentially, as I understand it, it's calculated. It's a product out of Black-Scholes, which is based on the at the money strike of the underlying, and in this case, the next day, one standard deviation either side of it, of the open at night and the RTH Open, thinking that it's going to contain the trade with the majority of the trade. That's what I understand. Absolutely don't, I should probably take it off of here to not confuse anybody, because I'm obviously confused about it myself. I don't know anything. I just heard somebody talking about it. I think it was Anne Marie or somebody was using it, and I'd never heard about it before. They're continually talking about expected move in the options world. I mean, up and down, back and forth all the time. And so it made sense that it might have something to do with it. Because you need to recognize that futures market, a huge portion of the futures market trading is related trading around options. So I understand. I've not been in those worlds, nor have I traded in that world. So I can't say firsthand experience, but you listen to enough. It's like Trader's Lab. I've never seen Tom trade live, but I've been around there and around him long enough, in the same way I've listened to Tom Sosnoff long enough that I believe they know what they're talking about. And there you go. Take it for what it's worth. By all means, vet everything yourself. The statistics that are illustrated in when I'm looking at the backtest stuff over here and talking about that, be frickin' sure you determine those numbers for yourself. Best you can. Well, what would I think in this situation? As I said, I'm going to use my rules, but I was toying with the idea that I would put one or the other of my IB trade systems on the backtest chart. And then, because I'm going to go take a shower and take a walk and whatever. And it would then activate, and it won't trade the live market, but it would be visible if it works properly on the backtest chart. And I have not combined both IBC and IBF yet. It's going to be a bit of an exercise because there's a lot of user variables in the background, and as I develop them separately, some of the user variables are shared, so that can't be the case if I have both IBF, long and short, as one system. I'm going to try to combine them this weekend. Why did I say that? Because as I said, I was thinking of putting on one of the systems, and so what do I think is going to happen? Do I think that the IBC would be an IBF would be a more likely suspect, assuming we take out the IB high? Or do I think it would be the IB continuation? My gut feeling would be the IB failure. But again, I'm not using the rules. That's just, that's the wrong thing to use. That's my discretion. So I may forego putting that on my backtest chart. Because I don't. Sure as the damn world they're going to take out the IBI. That's pretty amazing. Got something goofy with the keyboard. I got all my. Hope I don't have to restart. Dismiss. Huh? Okay. Well, it's not one yet. Well, we're almost through with the 1 o'clock hour here, the 12 to 1. I was thinking that probably lowers the probability of a IB statistic. And then I realized that's likely a gambler's fallacy. The gambler's fallacy is a known psychological condition or instance where the best example is roulette, let's say. There's been 5 reds in a row. And the gambler's fallacy person would say, oh, the probability of there being another red has got to be next to nothing. The probability of it being black has got to be 90%. Absolutely not. It's 50-50. Actually, in roulette, it's not 50-50. It's less than that. But, that's the simplest way to look at it. Past performance has nothing to do with future, or past performance is not indicative of future results. Boom. Statistic fact. And casinos profit hugely on the gambler's fallacy. And in roulette, actually, in Europe, they've added a 00, which further dilutes the 50-50 probability. And in America, they've added a 0 and a 00. That's, I think in Europe, it's just a 0, green. Who cares about the number? It's green. And in America, they've added 2 greens, a 0 and a 00. So that further dilutes the 50-50 probability. Like I said, casinos only play games where they have pre-identified a substantial risk-reward expectancy, and then that's how they play the game. They weren't happy with 50-50. They skewed it to their favor. There you go. Now, as the day winds down here, there comes a setup which I've only traded maybe once or twice. It's not a vetted setup because you'd have to trade, I don't know how many million trades it would take, but let's pretend that we're in the situation we're in right now. We have not taken the IB low or the IB high. We're above mid, VWAP, everybody else. And let's pretend that it's 230. You would have a pretty reliable probability, or let's hold it, start over. We already know that the probability of the high or low being exceeded by price at some time in the regular trading session is 98%. So if you're trading up here around 95-ish, and it's, 230, 240, that's a reasonably good trade to put on long, targeting the IB statistic. Counter to, my definitely do not trade towards a stat, because now you've got time skewed to your side. There's only a 2% probability that you will take neither the IB high or the IB low in the session. If you have 15 minutes left in the session, or 10, that's a pretty good bet that you're going to take that statistic. That's 98% of the time you're going to be right. And I'm saying strictly that. If you're up here at the high and there's 10 minutes left, long to the IB high. Certainly not to the IB low, because you got to come all the way across the range. You see my point? I'm not going to do that because it's not a vetted trade, and I'm vetting the IB trades. That would be interesting, though, for me to consider that. Now, for my trading, that wouldn't work probably, because what would be the probability of getting on past the IB statistic high, in this case, to my 12-point target? Pretty low, depending on where you get in. But yeah, that's a pretty wild what if. I would not take that trade. I don't think, even with the statistics or the probability, because the likelihood of further continuation after the IB, I would think, would be very low and would suggest an IB failure. So yeah, that's pretty out there. That's out there like Pluto, in my view. There's one for you to think about. If you're a gambling guy or gal, get your spurs and your gambling hat on and get after it. Oh, baby, we're sneaking up to that IB high, huh? Well, this is going to certainly be interesting. Huh. Got a VPOC migration too, I guess. Back to here. Here, wait a minute. Hold it. Hold the phone. Yeah, they're both there. Yeah, I don't know what to say. Quite an interesting day, isn't it? Boy, there's a whole bunch of crazy crap going on now. Phew. Amazing. Truly amazing. Quite a big blast of liquidity dropped in here for a floor, right? Or target or whatever. I mean, it's only 377 contracts, but still. You, wow, holy smokes. Well, we're going to fluff around up here and get this IB high, that's for sure. frickin' iceberg's all about, but it's pretty ridiculous. Turn the damn thing back. I wish you could turn, I don't know why you have to have the icebergs and the stops on at the same time. I mean, what I want rid of is the iceberg. It's kind of dumb, isn't it? Oh well. Boy, oh boy, oh boy. I know what I could do, maybe. Let's see. I never play with these things, so. Show icebergs. Show stops. Oh, there you go. There you are. Football, so good for them. See, they think of these things. How nice. The minute I said that, I knew that somebody had to have thought of that first, before me. Yeah. Okay. Now what are we doing? Who's on third? Well, let's check how my backtest thing is doing. Well, we haven't gotten any signals yet. We have gotten one. We've gotten the B signal over here, huh? And that would be correct because we did close up in here. I have to look at it. What we don't have is the A signal. So remember that these visual signal markers are just, they're like the lines on this chart. They have nothing to do with the trading system at all. They are simply for my visual reference so that I can go, is this, did we get A and then B and then the trigger? Oh, good. Okay. You know, and is it in the proper alignment with whichever trade it happens to be? Strictly for the old guy to have a look. Now, the minute we trade up and cross here, we should get an A fire over here. It's that simple. Simple dimple. Did I not? Oh yeah, I did. What else is going on here? Damn, we're almost to the power hour on the all-important Friday. I want to see the trade happen and see how my backtesting rules work and all that stuff. But I'd almost like to see him stay inside here. I don't think I cannot remember ever seeing a trading day go completely through the RTH session without taking out the IB high or low. And that's exactly why the statistic is greater than 97.7% in all four open types. And in this open type of higher in range, it's 98%. So, you know, there's that. So out of 2,000 days, 2 days, well, there you go. That's a statistic. The statistic says that, let's look at it together. Again, this is all just math. Out of 1,998 days, we achieved the IB statistic 98% of those days. Let's just call this an even 2,000, okay? That means that we did not take the IB high or low, that the statistic was not met 2% of 2,000. That's 4 days. There you go. Math, baby. Math is hard. When you start thinking in probabilities and, statistics and stuff, it makes me feel better. I realize that it's a probability, and I realize that there's no probability that's 100% in the statistics in the trading world that we're dealing with. But it certainly is comforting to know what the statistics are and the probabilities are, and then make a statistically weighted decision about what you're going to do. How and if you should put, how much and if, or I guess the other way around, if and how much risk you should put on or take or assume in the current market. But there you are. Words of wisdom. Well, maybe not. So we could be looking at one of the 4 days. I guess it would be, this would be a fifth day. So that would change the statistic to, instead of 98%, 97 something or another, whatever, however the hell you do the math. I'm not worrying about it, but you see my point. So you see, my memory is not as good as I think it is. I don't remember 4 specific days out of the last 2,000 days. And I am absolutely sure that I was probably not around the market. Very likely it was not around the market. I wish there was a way to determine which days those were. Oh, there would be. I could change my backtest to identify a session where there was no IB statistic, and then run it, and I would have it would show the days. And I'm not going to bother doing that, but it would show the days where that occurred over the data set.
My. This is pretty interesting, actually. We could be watching history here. Kinda. Kinda, sorta. Maybe. Never know. We're watching one thing. It's 31 degrees. It's C. It's Friday. It's my wife's birthday and our anniversary. What else? Pretty good day all the way around here so far.
Well, this is actually exciting. Maybe not. So yeah, here we go. One of the nice parts about having these rules working and the back testing stuff with the trading system, I can easily do what if things, like I was just thinking here. What is the probability of a successful trade, either IB high, short, long, IB high, IB long, long, or short, any of the four, after 2 o'clock in the power hour, for example, RTH 3, RTH2, RTH1, etc. And that's the great part about them, and because you can do those what if things, you know, in the blink of an eye. That's really important. That's really a really great benefit. A really great benefit. I'm not sure that there's any reason to demonstrate that, but obviously if you can backtest 500 days of any signal in 3 seconds, yeah, there you go. There you have it. And here we keep testing. We've built this one up. Now, coincidentally here, this is kind of interesting, isn't it? But let's look. We've actually built the upper distribution now bigger than the lower one. Visually. I guess you could say the same here. Oh, wait a minute, I know something. I think there's a way, wait a second here. There's a way to do this. That's not it. I don't want to do that. What I want to do is turn on the info box. There you go. All right, so now with the info box on, you can see how many TPOs are above or below the mid, I think it is. Right here. I gotta be sure I'm thinking about this right. This has been a long time since I used to trade market profile, and I use these things often. Here. So here, look at that top TPO split. We've got 39 TPOs, 172 above the mid for a total of 222 TPOs. I think that's what that means. Been such a long time since I thought about these things. .3 range. On just the F in the F bracket. I'm gonna have to think about that. I'll have to look at that over the weekend and look back into the history of it, because there's always good data. I remember very, especially handy looking at overnight inventory, what you think is going to happen with the trade. I just eyeball it now, but you can actually see how many, what the TPOs were above and below settlement and stuff like that. A lot of data over here. Well, now the Full session has moseyed on up to join the RTH session. POCs I'm talking about. This is the full session. It's more muted yellow, and the brighter yellow is the RTH. They're now aligned. We're, we are definitely into the power hour here. We got about 47 minutes left to go. I'll do the recap at 14:30 as usual. We will have the market on close and balance at 14:50. But my focus is certainly going to be on this IB statistic. Be great to be standing here aware and narrating and witness one of the rarer events in our trading days. By golly. I'm not mistaken here, these data are for the full profile, and then the lower section below down there are the for the current bracket that you're looking at. In this case, it would be the J bracket starting at 1300. Let's see if I'm right. This should be A, I think. Yeah, A bracket at 830. That's correct. Then there's volume, and above remains the same, you see. 220 PPOs. I gotta look, I don't remember what percent Q is or any of that crap, to be honest with you. Been a long time since I exclusively traded off the market profile. Once upon a time I actually traded point and figure. There's one for you. That actually makes a lot of logical sense to me, but you got to have some horsepower in your account. To day trade point and figure is pretty tough, I think. Simply because you only take reversals or, things specifically defined in the point and figure rules, and they don't always happen every day. You're not supposed to take the trade off or back on again and those kind of things. So Didn't work out very good in my world. Well, 1400. Closing swing trade? You know, I'm just throwing them out there. I have no idea. I will be surprised if we don't get one of them out. As I've said about 45 times now, the probability of the IB high or low being exceeded, and that statistic being taken in today's higher end range open type is 98%. That means over 2,000 days. Well, 1,998 days if you want to be specific. Meaning that there's a 2% probability that neither one will be taken out. And if you do that math, that means that there's been 4 days out of the past 2,000 days where we did not take the IB high or low. There you go. Wait a minute, maybe I'm all wrong. Maybe it's 40 days. What's 2%? Let's see, 1% of 1,000 is 10, I guess. Isn't it? I don't know. Yeah, maybe I'm wrong on my percentage there. Math is hard. There's 10 days, yeah. So it's, we have not taken the IB high or low 40 days. Out of the past 2,000. That doesn't seem like such a big deal. Now. I was going to type something and I had a thought that maybe my math was wrong, and I was right. My math was wrong. I needed a couple more zeros floating around there. A couple more days floating around there. Well, we're approaching the bottom of the hour. I would be extremely hard pressed to put a trade on at this point. I'll be interested to watch if the system does take a trade, but I also have an end of day rule, which takes out any trade put on, I think it's 90 minutes. I have to go back and look. That would be 2:30. So that could eliminate any possible trade at this point. I need to look at the rule, to be honest with you. Oh, I can do that. Hold on. Where am I? End of day rule. Either one should be the same. 90 minutes. So that would be 2:30. So at 2:30, we wouldn't be able to take a trade. I guess I could change these to 60. But I have to go back and change all, make sure they're all the same. Let's see here. Okay. I don't guess that matters then. Let's do that. Delete. Wait a minute. I don't want to do that. Let's make this 60. So in other words, this rule would take us out at 3 o'clock. And I'll do the same for modify rule, save, and I'll do the same for the end of day. The hell? Wow, that's really goofed up. Let's change that all around. End of day. POS. Session close. 90. Bars from start of session. No. Minutes from end of session. Okay. Save. Close. Modify. Boom. Now, if we get in, if a trade is fired, it will automatically be we'll automatically close them at 3 o'clock, assuming that ever happens, and that won't happen until we get an IB high. Then we have to get which is the rule 1, then we have to get rule 2, which is the pullback, then we have to get rule 3, which is the trade up. Impossible, I think, but hey, you never know. What do I mean by all that? Well, we need to take out the IB high. We would need to trade back into the pullback zone, trade up to within 1 point of the IB high and go short. That is the IB failure trade. And I guess I wasn't showing any of that. Shit. What I did was change the overnight, the end of day exit to my position indicator for session close at 90. I saved both rules. I saved the whole shooting match here. What I'm saying is that I need all 3 rules. Need to take the IB high, need to pull back to the pullback zone, trade back up to the 1 point. That would be the short. Pretty unlikely. Otherwise, I'm not interested in the trade. And now I think I've managed to capture all that stuff in the stream. Looky, looky, looky. We're rounding the final curve. My. Super duper. Well, it's not quite as rare of occurrence as I thought. It would be 40 days out of 2,000 that we have not taken the IB high or low. That's 2% of 2,000 days, I hope. I was thinking like 4 days better, sounded better. Yeah, well, you know, I grew up on a ranch in Montana. We didn't mess with zeros a hell of a lot. There we go. Final curve, boys and girls. Huh. What are we going to do? I don't expect any kind of a VPOC migration anytime soon because we're running here at 14.6. And the closest neighbor we've got to it is 10.98. 10.9 here. You have to get 5,000 contracts traded out in order to get this to move down or up. You have to get a lot more traded out to go up. So I'm not expecting that to happen. We did have a VPOC migration right here, so everybody's all excited about that. I'm sure several people are got long on that. That's definitely not a trade for me. I've already talked about it. I'm not saying anything more. To hell with that. Okay. Boy, boy, boy. Well, there we are. 34. I'm going to do the, I can't believe it, do the recap, huh? The recap-a-rooney. Well, let's start out with my on-time favorite news. Investing.com, and this is free. Let's look at next week. These are the reports on the docket. Composite, whatever the hell HPI is. Chicago PMI, consumer confidence, jolts. Ooh, there's a biggie. That's Tuesday. Wednesday, we've got, ooh, Christ, is this going to be another non-farm Friday? It is another non-farm Friday on Friday next week. Wow. Wow, there you go. That's another big one. Got a lot of data out next week. And factory orders, jobless claims, non-farm payroll, S&P Global PMI. Ooh. I don't think there's any earnings to shake up a stick about. Carnival, Nike, no. I think earnings are pretty much toast. This is investing.com. It's free. You can pay for it if you want to. I like this one, and I've used it for years because I like the format. Easy to screen snap and easy to paste in a Discord or wherever, and for people to read. The other financial source that I do use for news is Financial Juice, more from the right side of the column over here, which is more of a squawk box feel, kind of a daily update news squawk boxy kind of thing. Somebody said something. This is the docket, which is more of same idea as investing.com. You can filter both of them for your time zone and countries and reports you want and all those kinds of things. This one is also free, but you can certainly pay all you would like to. This one will bring up the, for example, on the squawk box side, we'll get the market on close orders at 1450. Market on close imbalance. Always say that wrong. Don't know why. There you go. So next week is a big one, including non-farm payroll. That always stirs the pot. Here's our day and our week. And here's our week. Here's today, yesterday, Wednesday, Tuesday, Monday. Now that we have an overlap here, I will draw a new volume profile, or market profile. Start that off for Monday. NASDAQ. Our volumes are staying up there. We were up to about $1.40 at one point today, and our ETR is falling off the map as expected. We're down to zippity-doo-dah here. We were up as high as 11 there, down to 3.5 again now. This is ATR, average true range per minute bar. Yeah, okay, so last but not least, we have our old friend Bookmap. Watching closely for this IB high or not. I've got my, we have our trade system for the IB failure. Push to this this chart, which is live. You see we have one signal so far. This signal is not from the trading system, nor are these lines. They are, I'm going to say this once more so there's no confusion. These lines and these signals are strictly for my visual reference to confirm things are happening the way I expect them to. Once there's a trade placed, there will be a plot, the entry, T1, T2, that stuff. But there won't be until if and when there is a trade placed, which will be an IB trade based on the rules, which I've explained before. So let's not worry about that and get back over here. I'll clean up these revisited, and this one has been revisited right here, huh? This one has also been revisited for yesterday. My workflow is that when a level has been revisited, no matter how it's configured, I put the text black, remove them. These are high and low volume nodes which push automatically from Bookmap. Full session volume profile, which starts at 1700 the previous trade day, the new open of the ETH. This will now reopen Sunday night at 1700. The RTH session, which starts plotting, resets every day at 8:30. And these are my notes column where I change the title of the column to the open type, and then enter the applicable statistics based on the open type column with their adjacent session prices here pushed automatically to Bookmap from my RT. No indicators on my charts or my Bookmap. POC, one for each, nothing magic, just the price at which the most contracts have traded in the session. Nothing more, nothing less. IB high and low, also nothing mysterious. That's just the high and low of the first 1 hour of the trading day of the RTH trading session. And a big deal that we have not taken one of those two out. There's a VWAP for the RTH and VWAP for the Globex, which is the full session. I think I'll change that to Globex so it's not confusing. And this is the mid for the RTH. The rest of the levels are plain as the nose on your face. Here's the previous RTH high. Here's the Globex VWAP. Here's the RTH mid. You know what I mean? It's just, there they are. They're just abbreviations for the names. The lines here represent the same exact data as the flags, both pushed instantaneously from IRT, updated 24/7. If you could use these session prices, let me know and I'll hook you up with, I push them live starting at 1700 on Sunday night, continuously through 1600 on Friday. You can use them here in a cloud note column or in the indicators or in whatever your program of choice. But there you go. It's a CSV file. And it's especially formatted for these colors and text and stuff. Let me see what else. There we go. We're going to have our MOC imbalance at 1450. That's 7 minutes. We don't really have any big outliers up here of liquidity waiting to spoil your day. 365 down here at 66.85. That's a pretty big deal, I guess. And $1.71 at 86. My question is always, and I wish somebody would answer me, or that I would figure it out. Is this the floor and support? Or is this a target? Is this a magnet? Or is this support? Same way, just the opposite. Is this a lid on the pot, or are they trying to attract the market up there by offering liquidity? Stream every day, every trading day from 0800 in the morning through until 1500, a little after usually, every day. Start with the pre-market and the setup and, analysis of what the overnight looked like, put in our statistics and all that kind of thing. And then we go from the open until 1500 without interruption. I stream the monitor rather than the application so that you can see any open program. Also the hour, minutes, and seconds, and the date. Ties up to Bookmap and IRT. I don't want there to be ever any question about anything to do with the stream. It is 100% transparent and accountable. And I hope that's obvious. That's the intention. And, who am I trying to bullshit? Me? Come on. Come on now. I'm not monetized in any way, so I'm in it for the subs and the likes and, comments in the chat or whatever. That's great. But I'm not monetized by YouTube or anything. All of this gear and everything I bought and paid for and keep up myself. Because it's my trading journal. My goal is to have a consistently profitable, sustainable trading business. And this is a cost of doing business and a function of the business. Now, if YouTube wants to give me $100,000 a minute, you can bet your butt I'll take it. I'll split it with you. but in the reality world, that's probably not going to happen. In reality universe, that won't happen. In boomer world, that would happen. Absolutely. Well, by golly, I think we're going to get to witness what I would consider to be a rare occurrence. 2% occurrence, I guess, to be accurate. Here's our little trade system all ready to fire. And it's interesting to be sure you understand. We've only gotten even this one. These lines, by the way, all start activating at 9:30. So if I see some signal or something going on out here, I know it's something wrong with the code. We've only gotten one potential rule right there. Now, I have not figured, there's probably a way that I can not have the subsequent rules fire. I have in the trading code, I'm talking about these signal markers. Have the signal marker fire without having the first rule in place. But to be honest with you, it's not worth the mental effort to do that. At some point I will, but right now my motivation is to get these combined over the weekend, the IBF and the IBC, so that they're working perfectly and independently as they do now. The problem is I've shared a number of the V-pound variables with each, and I need to set up a whole separate. My theory in building this whole thing long ago was that I would build the trade management piece, which is right here. You notice it doesn't say IBC, IB anything, it's just short T1, T1, blah, blah, blah. Okay, build this trade management piece and the execution piece, and then the only thing I need to change ever are the signals, which works exactly as I had imagined and envisioned that it would. For example, between the IBC and the IB, look at the name of these rules right down here. And then I select the IBC. There's the IBC trade, which will fire over here as a Got to be careful about that. And you'll notice that they're the exact same rules. So there's no reason that I need to rebuild all that other stuff. All of the trade management pieces. Come on now. Don't get squirrely on me. Don't get squirrely, Shirley. I want to get this in place, and I want to have this rule. I guess it's set over there. I don't know. I hope. It pissed me off if I was doing that and screwed up. I'm going to take off this IB. I'm going to take that off. Close. And then I'm going to save. And I'm going to re-push this to the chart. Okay, now, just in case I had screwed something up, flip it back and forth, which I've never done before, and this is, you know, kind of all new ground here, actually. So if we get the IB high, and if the IB failure sets up with those rules as I described them, it would fire trade. It will not now, because we're past our IBC, our market on close imbalance orders. Now we can go back to them, and there they are. S&P 500 has a sell side 435 million contracts. NASDAQ 100, sell side 178 million. Dow 30, 390 million sell side. And the Mag 7, sell side 192 million. There, campers, we have it. I think that pretty much covers the MO market on close orders. It covers the well, I'll be damned. Unless they pull it really a hat trick off, we're not gonna take those IBs. And I have just thought of a potential question for myself here. The IBs are based on the session, which is 0830 until 1600, not 1500 or 1510, which is, or 15 quarter, which is the curb trade. So in theory, if they get a closing swing trade of some miraculous thing, they could take the statistic between 1500 and 1600. I would not be trading it, nor would the system, the trade system, take it or do anything with it. But in terms of the statistics in the study, that would be the case. Could be the case. Doesn't seem to me like that's on anybody's agenda, but who the hell knows? Who, I ask you, the hell knows? Now, we've all seen a closing swing trade where they get some sort of squeeze going or whatever else and it goes zooming up a bunch of points. Certainly is a possibility. I'm going to call it a day at 1500 or thereabouts. Now, I'm going to call it a day for the stream, as I do every week. But you don't know. One thing about the non-farm payroll, which as we just determined in the recap there, is going to be next week. Friday. The stream will be an hour early. It'll be about, well, 45 minutes. I fire the stream up about 7:45 to be able to do a quick review and see what the reaction to the non-farm payroll is. I don't trade that. I think I've droned on long enough about managing your risk and protecting your account. Hopefully that something soaked in, and I realized that would be that is a situation where you cannot control your risk. So we've got 4 minutes here. Let's just look at right here. This is the 730. This is the number that was out this morning. 730. But I forget which one. Now, you know, this is not really indicative. I mean, this is not a good example because it doesn't fly both directions. But look how fast and how quick that moved and how thin that liquidity is. There is no way you can manage your risk across that. If, for example, you thought it was going to go the other way and you had a short up here, your stop could well be in the market, but you might not get stopped out for way up the road there someplace. So keep that in mind. The best way to manage your risk in an environment where you don't have any control like that, like a big report, is to be the hell out of the market. Or, you know, if you're risk neutral, who cares? The worst that's going to happen is you're going to get more profit or maybe less, but you're not going to get, yeah, it would have a stop as well, of course. And that you could get whipped with the stop. So you could get slippage and lose money, even with it risk neutral. Well, there's 57, boys and girls. Campers. And no IB high or low yet. Oftentimes, but not likely this time, we get an IB shift right in the last closing minute or so, or just after, but we're at 18,558 or 8. We need to pick up 4,000 contracts up here, or no, 7,000, 6,000 and change contracts up here to get the IB to shift at all. So that's not likely. I don't mean the IB, I mean the POC. Sorry. We could jump up and tag the POC out, or the IB out. That's a possibility, and I'll be standing here watching it. We got about a minute and 30 seconds left to go. Minute and 50, 40 seconds, a minute and 30 now. In this session. And I would suppose here come those marking on close or slam. Look at that liquidity slam in there. They may pull it up to the IB. You never know. It would be interesting to me to know how many times that, if they do that, is that considered a hit? I am definitely not going to be trading it. I just thought of another thing that could be that I need to fix with this system. I changed the market on close deal, but I need to, there's a parameter that limits the trade entries between the IB, or 930, and I have to look at what it is. I think it's 230. rather than need to set it to a V-pound variable that I could set externally. And then you set one V-pound variable. That's the reason I use them. You can set one and it changes everywhere that V-pound variable is used. There you go. So there we have it, 1500. There is the cash market. I don't know whether those are the right buttons or not, but they're fun to push. I don't hear them. It's dead quiet in here. If I want to hear the audio or the sound or something or music, I have to put on a headset. Well, looky there. Now I will know very definitely, because this is a special day. The last day I saw that. I'm not one of those old guys that remembers all the dates and calendars. Yeah, it was, November 3rd, 42 was a Wednesday and blah, blah, blah. I don't remember. Not that way. I remember things very vividly, but I don't remember the dates associated with them necessarily. Well, here we are. And as hoped, expected, whatever, no trade here. While we're talking about that, I guess I can look over here at the entry stuff. Yeah, you see, this is the position start from session start and position from session close. Obviously, we want session start because we want to be after the initial balance at this point in time. But here's the session close at 90 minutes. So this would not have taken an entry past 2:30, even though I changed the market on close brackets to 3 o'clock. Understand? And I'm pretty sure that that's the short one. This is the IB failures, by the way. Yeah, they're the same. Okay. Now, the way to get around that is to have in one of my, my main do nothing kind of ones, have this set to a V-pound number. And then like these are. And then all I have to do is change that one place, and any place that uses session close or session start is going to have the same value. A little trick of the trade with this program. Yeah, I kind of let it mosey here for a minute. This is Friday afternoon, so don't let me hold up your cocktail hour. I'm gonna see if there's somehow or another they manage some oomph and get up to that IB. For the sake of the stream, obviously my bookmap and my IRT run until 1600. And then I shut them off, or bookmap anyway, because I want to keep a clean record of the ETH and RTH for every day. IRT works on the data, so it's not a problem. But since there's nothing extra special going on, I will let the stream run a little bit along so we can see if they actually get that IB statistic taken out. Still got this 300 down here, and they got 230 below it. With the sell side imbalance, I would imagine they'd go down. I don't quite. I've got to do some research into what those two things. I need to do some research into the implied volatility and the expected move. Make sure I know what I'm doing there, and also the something smells funny, and also the market on close imbalance. I'm gonna knock this thing in the head at about 15 and a quarter, I guess. I'm not gonna let it run till 1600. I think that's ridiculous. Even though it might be interesting, I guess. What difference does it make? the mic on mute and go chase Mom around the couch and, you know, do all that fun stuff. $7,000. Jesus, that's amazing. 6,700. On my back testing there, I don't know if nobody's around now, I think. Interesting, on the back test back in 23 was down around 4,600. On the screen snap or the thumbnail for the stream, the starting soon thing, the market, the current price when I took that snap was 42.23 quarter for the ES. It's you need to really take a long look at that stuff and your trading results. You may discover that buy and hold is the way to go. You know, stop and think about it. If you had an index fund or something, and back then, like $100,000 for one lot or something, you know, in the futures, which I don't think they can do. And I don't know all about ETFs and all that kind of stuff. And there's fees, and, you know, you can bet nothing's going to be simple about that idea. But, yeah, pretty crazy. Pretty darn crazy.